So there's plenty of upside. Now the question is that, remember, trend resume in a 5 waves to the downside. This decline here is a 3-way move. If we would have something like this, that's called a zigzag. 5 down, 3 up, 5 down. So zigzags are very simple. 5, 3, and 5. Complex is, first, it takes forever. Second, it has a lot of subdivisions of zigzags. So you have 3 down, 3 up, 3 down. So you're just like fighting all of these. So you basically have it's called a flat, okay, with the connector X, and then you have the Y. So you have 5 here, 3 here, 5 here. That's your X. Then you have another 5. Then you have another 3. Then you have another 5. You see, you have a lot of subdivisions. Zigzag is really simple. 5, 3, and 5. So the only difference between it really doesn't matter. I mean, what depends like how the price will come down. So if you go by an ABC, ABC, so you just go by A, B, and then you have C. Remember, the C wave is always going to have a five waves to the downside. Y wave is going to subdivide into a 3 wave. That's the only difference between a complex and a flat. So because C cannot be a 3-way move, right? So in a complex world, you have this decline comes down in a 3, or Y can be a triangle, something like this. So it's confusing. I know that. This is why I put this thing all on one side and I just more focus on swings, because swings is going to tell me when the swing turn up, and then I'm just going to try to position ourselves and, and go from there. So now the question is like, where is the possibility for the price to fail? Well, nobody knows that. But what we can do. Okay, well, we had a low here now. We're off 10% off the highs. We're down 6% year to date. And we're approaching what we closed yesterday at, what, 55.25. Which doesn't mean, I mean, if if this is is gonna if this is gonna turn into this third wave, okay, we're gonna find out in the next week or two. Why? Because we already, I mean, we're yesterday, I think we barely took out this high here. If this third starting to accelerate, I mean, remember, third goes, it won't stop. I mean, it's, you see right here, good luck buying any dips here, you know, after a drawdown like this. There is absolutely no chance, you can see it here, that will give you any chance right there. And there is a bit of a dip here. Like, it's not going to give you any signs to get in the market. It's going to have, like, you see, gaps after gaps. Just Probably just going to accelerate. This is the most powerful wave to the upside, is the third wave. Same thing to the coming to the downside right here. Just no chance. You're always like, should I get in? Should I wait? Should I? Yes, this is where we all make our decisions. What should we do? Should we buy? Should we just sit back? Should we just wait? Let this thing just flush out everything and then things can calm down and then we can consider buying something? Also, when you had a flush down like this, everybody's trying to pick up leaps. Well, leaps are 10 times expensive because your IV explode. Now you're looking at like, okay, well, if I'm gonna pay for such a high premiums and then the volatility is gonna come off, well, I'm not even making enough money now because I paid so much high price for the premium, including the Vega. So so now the volatility is coming off. Well, now you're not expecting that big of a payout. Even the fact that you holding 50, 60, 70 delta or 100 delta trade depends how many number of contracts did you buy. Your volatility is gonna hurt. It's gonna hurt you. So a massive spike in volatility, your best option is always a future market. And some of you guys cannot trade futures. A lot of you can. So I highly suggest you, to at least have a future account. It's if you have enough funds to like if you really want to trade and say like, hey, I want to get myself, some sort of a trade out. I mean, future market does help. If you don't have to deal with theta, you don't have to deal with vega. It's a simple number of contracts that you want to buy, and then you just go and and see either we play the bounce or what's the next level up, which I post them every day after the close anyways. So that girl Sarah, she likes to trade futures. So just they work as good as a cash wave count. The cash session is just an open until the market opens, and future market is open all night. So that doesn't mean that you're gonna have to sit and trade day and night. Just too much trading is just it's just you don't want to be in the market all the time. Some days you just want to step back, just watch the price. Nothing is, it's not like the market is not going to open tomorrow. And this formal approach it hurts people more than that people actually take advantage of it. The whole trading part is so damn emotional. It's just, you kind of have million different thoughts in your head all the time. Like, what is going on? What is going? And then what happens in the end? Market's gonna rip right back up. It's a matter of it's gonna take 2 months, 3 months, 6 months, 7 months. If you just have to ask yourself a question, is the market ever gonna see 6147 again? Absolutely, it will. Now, if you thinking like, oh, we're going into that 20% drawdown of a bear market, those days are, I don't know how some of people can consider that in a market the market which is now that just moves based on a one single tweet. How can you say a market can go 5 years or 6 years into a bear market? Like, I don't know. It's just, I don't know. I might have a different way of looking at things or compared to other people, or some people are just like too much. We're in such a high paced market. It's just one, like, before even, like, if he's gonna say something while he's in the White House, it's just market will pops and then everybody's looking for a news like what happened? How come market just moves so much? Or how the market just like these are this kind of a stuff was not happening here. as we all know that from here. This is all the Biden world that we were trading before. It was a great run. I mean, we made a, I mean, we made a lot of money. Last year was, I think, was one of the best month of the year, for a very long time. Last year, I mean, for me personally, it was one of the best year. I'm not gonna, I mean, I'm not gonna lie. From stocks to Bitcoin, I made a lot of freaking money last year. I mean, this giving back this, I'm fine. I mean, I'll manage it. But uh, I mean, remember, I mean, we talk about this is like him starting his term, his 4 years, you know, here was kind of challenging, you know? I mean, he got in, he managed to roll this much, gave everything back, and then from there, then AI boom and then everything, Well, yeah, I mean, this is all the inflation. That's what the main cause was, basically. So this is where the printing press started printing money, right? When the COVID happened. So all the money printing comes all the way up here. So the effect of this money printing threw the market back into inflation mode. It's just where the bear market started, right? It was a choppy kind of like little decline. And then from here, inflation starting to cool off little by little. Fed cuts 2, 3 times, and then market going back up. Here we are now. So for him, I mean, for the 4 years of him, I mean, can you can you make a case like this that he's going to be in the office for the next 4 years and we're looking for this 4, 5, 6 years of bear market that everybody talking about? Think about it for a second. A guy who's all about stock market, you think he's going to let this thing happen? He's talking to she or he's not talking. Like, you see, like, for me, I think these tariff talks, they're all they got all baked in here now. That's it. Market just really doesn't even care anymore. The deal is gonna happen or if it's not gonna happen and this and that. It's just like a political stuff is just like it's crazy. Nobody can confirm that he's talking, but he's telling everyone that there's a talk going on. Who do you trust now? He figured it out. This guy knows and how to play the media. He's a media guy. He will give everyone a story first thing in the morning, and the entire media will talk about it until the all day, until nighttime. It's always like this. Now the thing is like he's gonna hit him back with this much and this and that. It's just like can the the us see the thing is this that this flush out that we just had, if we are in for a slow growth, I would make a case here of this. That would take us like weeks and months to just stay sideways. There, I can make a case. That's where we can make a case of a complex correction. I mean, but the way this price is coming back up now, I mean, remember the weekly swings are still down, so we don't have any confirmation of a swing, for on a weekly time frame. because we still need 2 more weeks of higher highs for the weekly swing to turn back up. We don't have that yet, so we need to go through 2 more weeks. I think right now it's all about earnings, as we all know. We're starting the most busiest week starting next week. Google is out and Tesla is done. That's all. So we have Apple, Amazon, Microsoft. That's going to be the big one, and Apple. So the Netflix, Google, and Teslas are done. And well, Nvidia is always going to be the last one. So that's gonna. So I think the next 2 weeks, market is just going to be fully driven by earnings. I don't really. You see, like it looks like that market is reacting based on positivity that he's laying out, saying that there's a talk going on, and market is buying it. Even the fact at the same time nobody can confirm that thing, because if it's a fake news or he's just making up, but at the same time, market is pumping. So to me, it's just like the next 2 weeks, I think it's going to be all about earnings. So we're just going to have to go day by day, see how the session goes, and then we're just going to go and position from there. Now, opening full size positions into the earning is another risk because you have a full earning risk. You know, it's kind of dangerous to buy two, $3,000 worth of option contracts and then 3 days later we have earnings coming up. I'm not risking that kind of a money on earnings. I would never do that, you know? So it's gonna go through. I mean, it's gonna go through pretty quick. So once that thing will be out of the way, then we'll see. I mean, where we at. But the point is, upside zone is what is this is what we'll watch. I mean, technically, X wave fails around 50% of the trade. That's a typical retracement of an X wave, called connector X. So from there, price has to try to take another leg lower if it is a complex, which I did it here, which I did here. God, I got so many. This one. So if this initial decline that we just had from peak to trough, from 61.47 all-time high to 48.35 low, we just count this as a three-way move to the downside, make this thing as a W. From here, we can do A, B, and C. Then we have another A, B, C down in B, okay, which is a C versus A, which is called a flat, which is a 100% relationship. The 100% relationship was 5094. Price stopped at 5101. From here, we managed to rally back up to 5881, which is this resistance right there of the prior swing high. And now here we are. So if this is an A, B, C of a connector X, that's the zone. Okay? Because your C wave is always going to have 5 smaller waves. Unless we can change this to an A like this, that's a different way. Now, if this is the case here, now remember we talk about the Y wave, right? So we need 3 to complete this Y. If you just wanted to leave it as an A, B, and C, this is all going to be a 5. So that's the difference between these two. I know that it's confusing, but it's just the way it is. Okay. Looking at the price here, as you can see, that what we've been all trading is a back and forth price action for the last 2 weeks, the week we just had and the week before. Last week was an inside week. Remember, we always look, it was the first inside week of the year. Now we had the first outside week of the year. Remember, I showed you the screenshot that each year S&P has an average 5 weeks in a one calendar year. That's when it managed to put an outside weekly bar. We just only had one so far. Okay, so there's going to be four more for this year. This is by like I'm looking all the way back from 2020, all the way back down. So because these are very rare bars. I always talk about it, there are because it engulfs. It makes the high and makes the low. It's very difficult to to see to make the case like where would be the next bar would open because the previous one engulf. The inside ones are neutral bars. Those are the choppy sessions. The price just literally stays range bound. It crushes premiums basically on the option side. Not if you have shares, then you can just sit on your hands and you have nothing to do. But adding a position like sizing up a position on an inside bar, never ever do that. You know, you are looking to go up, your eyes should be on a green bars. You need a higher highs for the price to go up. And same way to the downside, you need lower lows. You need red bars. So the insides are the ones are very choppy sessions, you know. So I mean, I don't mean I'm tracking like two, three. This is a smaller time frame to be honest. I really don't break my sweat over uh, over over this kind of a time frame anyways because it's just too much noise, you know. Yeah, for a session it does help, you can find some retracements and stuff, but I'm not like staring at that thing all day. So because I know, I mean, like you see like Elliot here like telling me like WXY simply an ABC connector WXY. There's so many damn different possibilities here in the Elliott world. When I go back to the swing, okay, well, I have the clear read. I have everything scripted. I know exactly where the swing turned up and when the swing is down. I much rather focus on that over sitting and fighting over this a counter trend move. But the point is like if we talk about how fractal Elliott wave is, you can go back as far as you can. Three wave down, five waves up, three down. What do you think is going to happen next? It's just a repeating pattern, right? If it's on a smaller degree or on a higher degree. So what difference does it make? Because you know that every 5 waves is going to be have a three waves, a correction each and every time. There's nothing new to it. It's been like this since 1930. This 30 since the guy wrote this entire thing. He says five goes up, three comes down. We're seeing it. But now now the question is that the three turns into another choppy, another three, this and it can, which we don't know that because any counter trend move against your motive wave is always going to be difficult because market is gonna set back at some point. which we just talked about here. So let's see what happens. I mean, the door to the upside is this. That's your 78.6 sitting right there. Now, how much we're off from that mark? 5.8% as of the close, from yesterday close. And we're off 10 off the highs. Now, the main confusion is like, I much, I'd rather focus more on swings over this. Trust me. The reason why I'm saying is because Elliot is gonna give you so many different options that you be just like sitting and scratching your head is like, which one I should follow? So why would you put yourself in that kind of a situation is like when you know if it's a three-wave decline, it's not a five-wave, okay? We don't have something like this. So if this is all three, if that three can turn into another like this, we don't know that yet, but it can, it might not. But if it does, what do you think is going to happen next? It's still going to go up. It's just a matter of like how long is this thing is going to run its course. And any corrections are never easy to trade because you have either a bunch of zigzag move or you're just going to have initial drop retracement all the way back up, which is the flat that I'm talking about. Like you have a drop like this, okay? And then it's going to go all the way back up in a B wave. It's going to stop everybody out and then it flushes back down. This is a typical flat, you know? Can this be a flat? Yeah, we can make a case of this. Just take a simple decline here. Now we'll look at rip all the way back up like this. So you can do this way as well. And then you go like this. That's your flat. So Elliot is gonna give you all of these options and possibilities that they can. These are all the corrections, but uh, the only part is that there's too many. To narrow it down to at least two to even one is much. Then you're looking at like, okay, yes, if I do position myself, the probability that I'm looking for is at least like, okay, fine. If I'm one side, if I'm wrong, if the other one is going to be right. In this case here, I have almost five, six different ways. So which way you think is going to happen? We don't know that. We simply don't know. Either we're, if this is the initial drop here as an A, or this was all of a correction that is already done, okay? Or this decline, which is all it was A, and we just take a full reversal back to the upside in B and then come back down in C. So this is a question mark here for a flat. And then the other one we can do is like this is all of a W, and now we're looking at the connector X, and then we'll look for another subdivision here in Y. Or we can just do this as an A, B as and then we'll look for another C, which I already did it here. Never mind. A worst case is this, if this is W here, this is connector X, and then we just go sideways here in Y. So these are the two complexes. This is the flat. This one shows this is done. You just flush it out. That's it. So which option to choose now? You see how many different ways that you can think. Now you just like sitting and thinking like, what's gonna happen? Which one now? How I position myself. So when we come back here, I don't have to worry about any labeling. I don't care if it's a W here, X wave, B, C, D, E, whatever, Y you want to make a case. I don't care. I care less. I don't have to do any labeling here. Swing's doing all the work for me. Swing is up, the price is highlighted in green. Swing is down, price is highlighted in red. That's it. So this is why instead of me jumping from one count to another count to another count, I can do all that. That's not the point. Okay. I get all my confirmation from here. That's how I try to position myself looking at these charts first. Then I will make the case for an Elliott wave. Remember, I have combined these two together. It works. The two different strategies. They both cannot be wrong at the same time. If Elliott is showing you something else, but the Gann is going to correct you. I built a system over the years, working like, I don't know, countless hours. I know what works. I've seen the results and I know what is the return that I've gotten over the years by doing this. But now for you learning swings and this and that, you have to learn Elliott first before you're going to learn swings because you know you need to learn how to count the swings first. Those are the counting waves are the same way counting swings, but the swing's going to have a different high and lows because your wave count is going to have a much more, because the a lot of subdivisions. So back to this, I mean, there's so many ways. I mean, I'm gonna just leave the way it is. This one. Here's another possibility. What if we're just doing some sort of a motive diagonal off the lows? See, remember, we need 8 swings off the lows, right? If I start labeling everything off from this low by just looking at this chart, okay, it looks like it's a bunch of three-way moves, A, B, C, A, B, C, and here's another A, B, C, then another A, B, C, then another A, B, C. So that will complete a motive diagonal. It's too early to call it, okay, because we don't see a price starting to contract. But I'm just keeping it as a possibility in case we might be doing. The reason why I'm doing this is because let me go back here. So the reason why I'm making a case here because we did the same thing here off the lows of this bear market. Okay. So what has happened before can happen again. Remember, market is fractal. Elliott is very fractal. So we don't know that. So this is an expanding variety diagonal. Okay, A, B, 3, and 4, and 5. So we could have a same here if we're just gonna go off the lows. Could be a motive that, could depends what kind of variety diagonal do we get. So that will complete as an A, B, and C. Then you come down here to another ABC. Then you go back up to another ABC after making an overlap. That will complete 5 waves to the upside. Then you come back down again in ABC. That will give you an 8 swings off the low. Right now, by counting this thing off from this low, this is not an 8 swings. Keep that thing in mind. This is 3. The reason why, because you have a very huge retracements here to the upside, because the reason why, because last week we had an inside week. Okay, inside week, there's nothing to see on the wave count. And this week we had an outside week. So these 2 weeks we just had, they're very like kind of like confusing. Okay, they're not higher bars, neither they are lower bars. Okay, so we just have to wait for another week and two. We're gonna have a much better read on a price. I can tell you that. So we just have to. Uh, so this is why I said we just gotta have to see how these earnings are playing out. Now keep in mind, these sneaky companies, they stop giving guidance now. Okay, guidance is very important for earnings. Remember, some of these companies now, they just reported earnings. They're not giving guidance because they're confused about these tariffs now. So the company has full right not to propose guidance for the next quarter. That's really the same thing. I mean, it's just, yeah, keep that thing in mind. So pay attention when you're reading, when a company is gonna announce their earnings. Are they really giving out guidance or not? Because if you see like how everybody's trying to play the game, because nobody knows, first of all, whatever the tariffs that he applied, right, so far or whatever, no, people haven't seen any um, effects yet. But everybody's trying to make the case that is going to empty all the shelves, is gonna spike the inflation, is gonna do this, is gonna do that, right? Then at the same time, he softened his tone. Is like, okay, no, it's not going to be that aggressive and this and that, and we're going to make a deal. So yes, there is a lot and a lot of question marks out there. And we as an investor and a trader thinking like, how the hell should we position ourselves? What rate that these, the productions are all moving out of China. China is running to the rest of the world. Ignore United States. You don't need them. Okay, we will take care of everyone. Okay, screw the dollar. Dollar is going down in a toilet. We're gonna make a SWIFT system in Chinese yuan. Could you imagine? I mean, I don't have nothing against Chinese people. I mean, I've a couple Chinese friends, but it just, you know how much currency manipulation they do. I mean, I'll be curious. You'll be walking around and traveling Europe with Chinese yuan in your pocket, and you're trying to pay somebody there with Chinese yuan, and stores and these they're really gonna accept that. Everybody will love to take a dollar from you, but no other currency. It depends like which part of the world you go to. So it just there's many ways like if we look at from this low, counting this as an A, B, C, we can make a case here for a diagonal. If I turn this thing into a truncation here, which is valid, okay, this is an A, B down in 3 versus 1 is at 261.8. Here's your 50% retracement, which is this is a three-way spike move anyways, 1, 2, and 3. And then here you have a fifth wave. The fifth wave here, right to this 5 versus here, 61.8. 5 versus 1 plus 3. Where is my, so that's this, geez. And this, here's your 5 versus 1. So you have a pretty thick zone. So this, if you truncate this, see, truncations happens, but if you have a truncated fifth to the upside or coming down to the downside, you're going to have a very sharp reversal to the upside. That's what a truncation wave does. Okay? Always remember that. But again, they're very rare. It doesn't happen that often. But it's a part of it. There's fifth wave that just doesn't break below the previous third wave low. If you have truncation in a fifth wave and you get the massive spike up to the upside, it's a very good chance that you can make this thing as a truncated waves. You see the massive move that we had to the upside? It does confirm the truncated wave. If that is the case, so then we can go as an 8 swings. Now we can take this as a 5, as a 3, and now we're trying to go up in a 5, and then another 3 here, and then 5, 3, and 5. Now we're moving toward this third. If we go off from this low. Okay. This is playing out really good. I position this, okay, because of this. This is what I tell you all the time. You have to pay attention when I show you. Where is my, here. You see the fail swing here? And you see right there? That's the spike we just had when the market had a 2,000 point rally. That was a failed swing because when I saw this, it's like you have a failed swing on a 3 or a 5, you're gonna have a very good chance you're gonna have a 1, 2, 3 to the upside. Okay, so I'm always hunting for these swings, like in which time frame that I can find. These fail swings, I think I have the description on the channel. Oh man, these suckers are just gonna delete this thing every 90 days. I think we went over it before, but I'll post it again. It's not a big deal. I mean, the fail swing is basically if the swing doesn't, it doesn't take out the previous swing low. And when it happens and the price is reversed, it takes out the last swing high is considered as a failed swing. So the fifth swing technically is supposed to go out and take out this low. Okay, because you have 1, 2, 3, 4, and 5. So the point is like when I'm sitting and watching this, that's how I make the wave count here. So the Elliott now and the GAN working side by side. So don't judge why I'm doing this and this because you don't know and nobody knows what I'm watching and why I'm doing this. Well, I have reasons for it, and that's how I do it because now I'm going to make them both work side by side. So so is it better to stay long the market or should I just short the market? I'm be 100% long. Why I'm going to be long? Because I have 5 waves and 3 down. I have a swing 1, I have a swing 2. So why would I go bearish after a fail swing anyways? Because I know the third is gonna be after the 2 is gonna be a third one to the upside. So I see that you gotta so you know the point is that it's very difficult and hard just to rely on a one single chart and just throw money on the board thinking like okay yes I'll take my chance and and I will trade from there. It's just I realized this several years ago is that relying on one single technicals your it's hard, it's difficult because remember a price can be traded into 1,000 different ways. It depends like how you just want to be a volume trader guy, you just want to trade volume, you want to be a moving average guy, you want to do an ICT levels, you want to do swings, you want to do Elliott wave, you want to do Gartley, you want to do harmonic. I mean, there's like 1,000 different ways that you can trade the market. There's never a perfect way. There never will be. You know, every strategy will fail at some point. There's no such thing. We all know that. But in the end, what we're looking at is what? It's the probability. If this is a swing 1, and if the price retraces all the way back down here to this low, it means the swing is wrong. Then it starts another one. Then it gives you a bounce in 2. Then you look for a third to the downside. So it happens. I'm not saying that doesn't happen. But the point is that after the fail swing, okay, when the price doesn't take the low of the previous swing low, instead of taking out the high of the previous swing high right there, when you have a fail swing here, as soon as it's gonna cross this high right there, it's gonna become number 1. And then from here, more and more the price is gonna push, it will stay at number 1. So, so where do we find resistance? Okay, we define resistance to a previous swing lows. Here's your resistance. That's your resistance. This is your resistance. Whatever the swing has turned direction on the way up is going to give resistance on the way up because that was the support. I got taken out here, got a flush out here. Price managed to come right back up to this swing high. So when you take this, now you run it all the way across. So what happened here? Price went up, rejected again. And now I'm finally trying to make an attempt to clear this one in the last couple days. What will be the next upside? 5603. What will be the one after that? 56.95. So if this is a third, it usually accelerates, just like a wave count. But it doesn't apply all the rules and stuff of an Elliott to a Gann strategy, the swings. But the concept is about the same, right? So it's the same. What we're trying to count on the wave count is one, two, three, four, and five. It's the same numbers here. As you can see it here as well. One, two, three, four, five. But now the swing count doesn't have any limit. It can go up to 7, 8, 9, 10, 11. But Elliott just stops you after five. That's it. That's it. Done. On any smaller degree or a higher degree, you have five completed waves to the upside. That's it. Not trying. The price is going to take a pause in an ABC or whatever the correction is going to come in. But and swing doesn't turn direction unless it makes a lower low. Swing just stays up in a direction. You just as long as the swing is making higher highs and higher lows, it just continues. Just keep going up and up and up. So this is why this helps. This helps a lot to analyze the market and to see where the S&P, in the world it is going. Can this swing fail? Of course it can. Anything can happen. Where the swing will fail when it's going to take out this low? How much is this third can can travel to the upside? Well, we can just simply run the extension, take this high to this low, and now here's your upside. Now we're projecting the upside to see how much the price can rally to the upside, can go back to the upside. We have what is the resistance here. So this is one. So now how do we build zones? Now you say like, okay, this is my first zone. Okay. And this is my second zone. That's where the price is at, right? There you go. So you build zones. Previous swing low, previous swing high. Now we're trying to clear this. What will be the next upside is this. And that doesn't mean that the price is going to get there. It can just get here and then back off. We don't know that. So I always look at trading as what? It's just only a probability game. We don't know. The price can just stop right there after 3, 4 points and just backs off. So this number here changes. So don't pay attention. This is ATR, just calculating the ATR range based on a 14 period. But this is now if I'm sitting and um, making a truncated wave to count as a 1, 2, and 3, sitting here trying to make a case of a diagonal, sitting here thinking like, oh, here's W, this is an X, this is a Y off an X. So we can do all this. Okay, we can do all this all day. That's not a problem. I just why I want to have five different thoughts in my head. What can happen, what will happen, and I can just simply look at this. Just trade off on this. It's the same price. So if the price is 55.28, you think the price is going to be different on the Elliott on the Elliott world? It's the same. So if the price is going up to 56.36, so we don't have here Same thing. You're gonna be off for like few points, give or take. It's the same thing. There has, I'm not bragging about it or whatever. There is not a person that I know that I've ever come across that who has ever combined Elliott with Gann. Optima people, they all know that. It's just like we've been in this industry for so many years. They have nobody knows that who has ever done this. They know that I do this. But I mean, quick flush downs and like these kind of a drops are always going to be very painful and very hard to predict because I mean, when the price coming down like 1,000, 1,500 points in a one single session of 6.5 hours, I mean, things get shaken out pretty bad. It just, I mean, looking at stocks like all, especially the big names, Mag Sevens. I mean, these are stocks are down for like 10 straight weeks in a row. I mean, come on. I mean, based on what? You know? So you know how rare it is for companies like, especially like Mag 7 to drop like 10 straight weeks in a row? Think about it for a second. What did companies doing wrong? The stock is getting punished 10 straight weeks in a row. Look at Meta, down for like 10 straight weeks. It's just like the weekly. Yeah, let's do the color bars. Look, it's a weekly chart of Meta. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks of lower lows. What are they doing wrong? When was the last time we have ever seen such a decline like this? Even here was two and three, like here, okay, 1, 2, 3, 4, 5. You see, you still get the bounce for a week or two. Managed price you know, will take a break. Not like this. That's what you look for. They call bar to bar relationship. Look what is going on here. Where are you gonna? Where else you can find such a beating like this? So if this all happened in a matter of what, let's say month and a half or whatever the time frame from February, March, April, now we're at the end of April. So we're looking at what, February 15, March, April, like 2 months, right? Over 2 months. So this is four. So that's 2 months and that's 2 weeks. So 2.5 months. Very easy to say, right? Very easy to say. But being in a position is the freaking most hateful thing you can do. To be in a position and been down for like 2.5 months. What those options gonna work? But you just like, okay, I mean, where does this thing start? At least it could stop or, I mean, it's gonna make a higher bar at some point. A company like this, wouldn't you think like, okay, if this sucker is down for like 2.5 months, is eventually is gonna get a relief rally or whatever the case is. But at the same point, there's nothing like the company is not saying like, oh yeah, we're seeing this slow down and our business is gonna die and this and that. I mean, it's just there's a lot of beating. Look at Amazon. So Amazon is the same thing, but Amazon managed to have 1 week of an higher bar. Okay. And now we had an outside week. A lot of stock has put an outside week. You see, last week was inside week. This was an outside week. As every stock pretty much did the same thing this week. They're very difficult. These two bars to trade. This is a choppy one, okay, because it stays inside, and this is the one it engulfs. So what I'm saying is like when you look at them, like here's Apple. Like Apple does manage to come, but it's not doesn't Apple doesn't have that 10, 11 points drawdowns. You know? What the other one? It's Microsoft. But these are weekly bars. Like Microsoft will take a pause at some point. You see, you got 3 weeks of lower lows. And then here you have the price will take a bit of a breather, but then it just flushes everything back down. And then you have another 3 weeks down. You see, it's not, but the point is not like full straight 11 weeks of drawdown. That's different. Selling some point like, okay, the stock comes back down, it will take a pause. But coming straight down for like 11 straight week is just it's crazy. There's that's very interesting. Yesterday, this I don't really rely on these signals. This go signal, go no go. It triggered on a weekly, I'm sorry, on a weekly here and on a daily here at the same time. I don't think I've ever seen the signals kind of go side by side. As a matter of fact, I knew that because it was showing no go here at the same time as well. And it triggered the go signal at the same time as well. So it just Tesla is it's kind of a little choppy to be honest. There's no way I can count this thing to be. I just need more price um, clarity for me to count a wave count. It's a mess. Tesla's a complete mess, right? This range right there that Tesla is in, okay, is very, you can see how even the swings are so narrow, right? They're very small. I mean, they're 16, 17% swings up and down, back and forth, but they're like very kind of like narrow swings, not like something like this, or, like you see, going something like this. So there's a difference here, like this. You see, this is there's no way. I mean, I will definitely figure it out. This price action here since the March is just totally sideways. So this, I mean, I don't know how to even label this thing because if you want to take this low and then you have another lower low here, so where are you going to start counting those the at least a five-way move to the upside? This still looks like a three-way move. Still gotta has to go something like this to make a five-way move. Yeah, and Tesla just, I mean, I made a case here um, on a weekly time frame. This one, you know, I'm trying to I'm I'm trying to count this thing as a diagonal. Like here's a pretty interesting thing if you notice here on this chart on a bigger time frame. Watch what this 61.8 does to the stock. Watch what happens here. But I all put all these boxes. Look, spike up, came back down, huge spike up, and here's our. These are all 6 1.8, 2 versus 1, 3 versus 1, 2 versus 1, 4 versus. So which one is this? C, yeah, this is C versus A. This is 2 versus 1, 4 versus 3. So all 6 1.8. The point is like this stock just like on uh, on a higher time frame, it turned a direction from this fib. If you notice, was almost to the penny, 101.92 is when he was selling, when he was paying for the Twitter. And then this one came back down, kind of poked below it. Like one, I was just like labeling this thing as like, it, I mean, it's some very strong price relationship that the stock has with this 61.8 for years. They're looking at like 10, looking at almost what, 10, 15 years. So looking at this wave count, it does make a lot of sense. I mean, like, I know everybody wants to go to the moon on this stock. I get that. Okay. Stock has reported the most horrible earnings, and stock managed to go up. I mean, all the negativity, the stores are burning down, and his Doge, people starting to kind of cool off now. Still, people are still against him, but at the same time, the other ones are still trying to support him. But at least burning stores and that kind of a stuff has stopped. And but the company really doesn't have. First, it's not showing any guidance. Second thing is this, they haven't reported a horrible earnings. So how do we make a case that, oh, Tesla is going to 1,000 based on what? I mean, for near-term promises, every CEO will give you the same thing. Tesla will be good for long term. I mean, what else would you say to a public if you are a CEO of a company? Okay, you're gonna go out on national TV. What are you gonna say? You're going to say the same thing. My stock will be fine long term. So if you're a trader, if you look into trade for the next 10, 15 years, I'm going to be fine in long term as well. So if you have that mindset and that approach, then why do you even care what happens day to day basis? Why are you getting yourself too much caught in the noise? Ignore it. If you are willing to spend money, buy something, and that's the money that you don't need for the next 5 years, is called long-term investing. Okay. If you cannot handle a drawdown or or just says like, well, I'm just gonna buy a stock and I'm just gonna dump it after 6 months, that doesn't consider a long term. Long term takes time. You know, a good companies, yes, they will reward you for sure. There's no doubt. But at the same time, people are just getting irritated and all emotional. Oh, my portfolio is down 20%. Okay, well, wait. What else we can do? There was a storm. Everything got shaken out so bad. People got hurt. I mean, we've all been through it. You know, you think it's not gonna happen again? Of course it will. You think the market is not gonna have another 20% drawdown, or the VIX will never gonna go back up to 30, the 50, 60, 70. Of course it will. 100% it will. Because it's just the way the market is. To time this damn move is the most challenging part. cannot time the market. It's very hard. If we all can time the market, you think we'd be sitting here investing? Tell me the next 5% move. I swear to God, I put $1 million on a line. Just fucking done. Done with trading. Rest I'm gonna throw the computer out the window. I'll never even look at trading. Give me the next 5, 10% move on an S&P. Guarantee that thing to me. I'll give you I'll give you half of it. It's all talk. Talk is all good. That's what they always say is talk is cheap. You can sit and yap your mouth all day, doesn't mean anything. It just, I mean, going off as a diagonal, it does make a lot of sense. Well, you have wave one down in two, up in three, three versus one, down in four, which is this 50% retracement of four versus three. So what do we look at after that? A five-way move. Now, looking at this price and these fib ratios, it does make a lot of sense. Plus the stock with a slower growth with no guidance, okay, does make sense for this price to make another subdivision of an ABC is toward this. So for me, putting a price tag on this stock for the rest of the year, okay, would be around here. That's it. And it's not going to be up in a straight line. It's going to be another ABC subdivision as well because you have a three here, three here, three here, three here, another three here. And that diagonal here, once they manage to complete this third, depends on how good their sales trying to pick up and if Tesla really starts selling their cars and demand goes up and things like this. And then we'll see what happens. So for 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 the based of yesterday price of 285, put a price tag at 600, that's still over 100 and 111% upside. That's a lot of upside. You really think of it, just to go back to the all-time high, still 71% upside left. Oh, we'll eventually get there, but this is gonna be very difficult to trade this, okay, with options. Okay. The reason why being is first, diagonal takes forever to complete. That's number one. Second thing is this, the diagonals has the same amount of time or very similar to a triangulation. Okay. They are they're not the ideal wave structure for option trading. They are you you're much better off just holding shares. That's about it. I'll trade Tesla, don't get me wrong. I mean, I have shares and I'll throw some trades, but I'll try to keep them short, because I need these are because you have to look at this that when the trend resume, you have a smaller corrections, on an uptrend. That's not the case here. When we go all the way back here to 101.92 low, it's not like the price is not trying to push back up. It is, but it's giving back everything. Okay, when you look at the price structure here compared to any kind of there's not such a thing that you can say like, okay, yeah, it does look like this. Remember, wave count is what? Your wave count must have a right look, right? It's very important. It's not just about throwing a bunch of labels, thinking like, yeah, I might be right, going up. Your wave count has to look right. Otherwise, you don't even have a wave count. All you're doing is you're just trying to force these labels to thinking like, yeah, I can just go up, make this a smaller degree smaller than one higher degree. If you do all that kind of a monkey business, you ain't gonna go that far. Wave count is not going to have a right look anyways. It literally says in the book as well. Because here the problem is that price goes up, give everything back. Price goes up, gives everything back. If you have these kind of a large, huge subdivisions, this is a diagonal because there's no such a trend that is gonna give this much back against that kind of a massive move. Because if you clearly look at it, this is a three-way move. It's not even a five. This is a three-way move. You can't even count this as a five-way move. This is a three-way move as well. Look, one, two, where's four? Where do we put four here? We're missing four to make a case of this as a five. So this is a three, as another three. This is a five. For Tesla from here to gain almost 100% upside from here, that's a lot of upside from here. Can make some crazy money. Okay, and which is not going to be in a straight line because you eventually, if the price does manage to go back up, it's going to be due for again for this B wave. Then it's going to make the final push back to the upside. So it has another three-way subdivision. It's not something that's going to happen like this. There's a big difference between this and this because it's given back too much, which I did it here, if you notice. This. Take this, look what this stock is actually doing. Here's a 101.81 low. We're looking at the wave count. Here's your 193% upside. Came all the way back down here to 78.3%. Remember 78.6? Decision zone, right? 53.62% retracement. And then what happens here? Price managed to make a new high, went all the way back up to 488. That was 251% upside against 193. What happens from here? Came all the way back down here to 78.6 again. 56.14% against 53.62%. This is a diagonal. There is no such a wave count, okay, will have these kind of a retracement unless it is some sort of a diagonal. This is why I was making a case there, and some people like, oh, guy was like, well, you the only one counting this. I was like, yeah, because you don't know what I'm watching, first of all, anyway, so don't judge. You have no clue what I'm looking at. I was working on this one first. The reason why I did this first, at first I was like, okay, let me just take a look and see the stock with no growth. Okay. How much is it performing over the years? This is peak, like this is the year low and this is the year high. So like, let's say how the stock is moving based on year to year basis. That's how I come up with this. Then I went back on a wave count. Okay. And then I was like, then I said like, okay, let me try to fit this thing with Elliott. See how does it look? Then I started counting from here. Here's your 1, 2, 3 versus 1, 161.8 at 3. Here comes your 4, 50% retracement, which is fine. Okay. 4 versus 3 could be 38.2 and 50% retracement. And then from here, I was like, okay, here it is, connecting the same high to the same low to these kind of a deep retracements. I'll do the same thing here. Now I need to match. Now what I have is this and this one side by side. When these two will work side by side means what is going to happen? You're going to have a much better chance for the price to work in our favor. Okay. So he's gonna leave it this way and see what happens. I'm not, so it's just a matter of like how the swing will go up compared to how the wave count will go up. Just gonna track it side by side. So, but then looking at this, it's looking pretty damn uh, promising. Every time this stock turned direction from 61.8. So simple. So what do we have here? 38.2 sitting at 293. 50% retracement will be at 323. So that will be the first zone that we'll focus on. Going to that, we will, problem is the positive signs are what? We have go signals on both sides, which is fine. We can consider that. It's fine. It triggered. So we're going to keep an eye on this one. So the next would be a no-go, right? Once the go triggers, then the next one will be a go no. So we're gonna keep an eye on that part. Second thing is this, we have 200 EMA here that is sitting at 287.02. Yesterday high was 286.85. So if you remember on the yesterday on the chat, I wrote it. I was like the 200 EMA is sitting here. So that's a strong one because it tried here and it failed. This is the daily chart, this is the weekly chart, and now it's trying to make another attempt. It could clear through it, I mean, but it might take a bit of a pause here to see how it manages to clear this. So you have to watch this one next week and see if we manage to close above the 287, meaning like we need a full body of a candle to open and close above this print, not a single session, not something like it goes up to 294 or 296 and it just backs off. So we need a body of a candle to open and close above this to kind of give us a sign like, okay, yes, the stock is willing to break the 200 EMA. It might continue. So the upside from here, which is meaning to taking out this previous swing high, which was 291.85. Okay. So that this one will put us to, once the swing is going to get taken high, that will put us into the 319 mark. The 319 here is a 38.2% retracement. Okay. So our pocket window, so we're going to do simply build a zone here. Okay. So we're going to take this, the first one. So this would be the first upside zone that we could build from here to here. So we're looking at 291, almost a 30 point upside. Okay, so the 30% upside bet that you're willing to make is for the price to then first close above this 200 EMA first. Okay, it's a strong one. You know that. Yeah, this one, once you break, you see like it broke here, came back, retest, failed. And once you break, then you get the retest and then the price is going to be under pressure for a long time. So, so we're just going to keep an eye on this. Okay. So, I mean, daily swing is up, so which is a good sign. If we go back here, where we have this. So this is the screen that we follow every single day. So what are we looking at? All swings are up except for Amazon. Okay. So all turn up now, which is a good thing, which is a good thing for the market as well. The Mag 7 moves, so does rest of the market is going to move. The rotation wise, Netflix is the only one that is leading the pack. It's the only stock that is up 23%. Every single stock is down year to date. So the market, if has upside, remember, I mean, we didn't even none of these stocks didn't even have a positive year yet. So these stocks just has to at least hit the zero mark just to break even for the year. And then from there, you can just expect like, okay, yeah, how much is the stock willing to go up on a yearly basis? This is everything. There's no a smaller stock or something is going to move the market. These are the suckers going to move the market. Okay. Market has been driven by these names. So, I mean, yeah, the bounce came this and this. If the market has upside, these stocks has to turn around, start turn to green though. You know, not Netflix is not gonna um, is gonna turn the whole Qs and the overall index. It doesn't have that much weight compared to Apple and Microsoft and Nvidia and stuff. Nvidia is still down 17% year to date. So if I mean I played Nvidia. Um, Took a while. I was watching, and then I took a shot at it, and I cashed it out a few bucks. That's a big deal. It was just hit him right at that 105-ish kind of VWAP. I was like, just cash it out here. I'll get back in again on the video for sure. But sometimes, I mean, the way the market is moving, I think just trade goes quick in your way, just take the money and run. Because uh, holding the like last month with the drawdown and these 1,000 points opens to the downside, that was just crazy. I mean, just tariffs and this and that. I'm just like, you wake up and you just like roll over to look at the phone and you're looking at like Dow is like 900 points. Like, oh boy, there you go. So I'm right away. I'm just like, the day's toast. You know, every time you had that kind of a big open or whatever, you just right from your head, you will know for a sure that we're just gonna have a lower bar for the day to start with. So once you have a lower bar to start the day, what is your odds for the reversal to happen? Very, very slim. Because remember, the lower bar can only turn into an outside bar. Otherwise, it's gonna remain lower throughout the whole day. So your day is pretty much toast. you know. So it's just then everybody just has that the mindset of the dip buying. Like, okay, if there's a big dip, should I buy something? At the same time, when you're looking at and how many times I'm trying to price out spreads with this spike in IV, even at the money spread on S&P for one contract costing me almost $1,900. Just talking about like making a 50-point wide spread, and the payout is like 1,300 bucks. So why would I risk a $1,900 to make like 1,400 bucks? It's just so stupid, to be honest. You know, I was like, okay, at the money. That's like we're talking like almost a first call is like 50 delta at the money, and then you just go out 50 more strikes just to try to pick like something like 30, 35 delta. You're paying like 1,900 to make like 13, 1,400 bucks because of the Ivy, because of the Vega. And then after that, if you do manage because you are desperate and dying to trade and you wanted to pay $1,900 for it, and then the price moves up, you have you don't have that much return. You paid more to expect to make less. That is not a smart trading. Don't you think so? You risk 1,000 to make 2,000. Like if you let's say a structure a spread, that makes sense. You risk 1,000, you pay $5 debit to buy two contracts. That's $500, right? For one, and then 500 for two. So you have two contracts, then you have a reward of 2 grand. Meaning that if the spread gets maxed out, I mean, odds are pretty low, but anything can happen. So if you have that, and if you manage to make 400 bucks or 500 bucks, but you only invested 1,000 bucks. And if you make $500, that's a 50% return. Thousand, just sorry, the 50 would be 1,000, not 500, 25. So yeah, some the you know options are good when volatility is down, when the premiums are less. Options are just crazy to pay for the premiums when you have a 60, 50, 60 wicks. And just you're way better off just focus or look at the future market if you want to trade. You don't want to trade, just sit back, let it, well, a couple of days, not gonna end of the world. Screw it. Wait the dust settles down and then we can just, but then people have their mindset like, oh, I didn't buy the dip, you know, because the price was down there at 4,900. I should have bought something. It's always like this. You're always like, oh, I missed out that thing. Well, it's just, it happens to everyone. Nobody's going to have a perfect entry in trading. That never exists. This low right there that we put it on is like now every bear is looking to retest of this low. It can happen, it might not happen. You might not gonna even see this thing for the next year or two. We don't know that. But we're just trying to see like, okay, yeah, I mean, this is an X, a Y, this, and we're gonna retest the low and this kind of a huge pin bar right there at the low for this massive reversal right there. This is the low right there. That's how I see it. Because lows are made by a huge pin bar. You're looking at a move from 48.35 to 49.80. That's a 3% move on a one single 30-minute bar. And the close was right there. Not in the middle, not here, all the way to the top. Yeah, this pin bar was very interesting low. I can just flush this out and then, because you don't see any low here of a third of a over 3%. Not this low where we have a 5.5% rally, but this one, not here, not this one. There's no single bar here. This was a gap down here. 1.65%. Not the three, not three something. You just gotta have to pay attention to these things when you trade price. Um, to use, I put it the same way. I did the same thing here. I did the cues the same thing here. Which cue is going trigger? This is a little strategy that Motivate has, the super trend or whatever. Triggered a buy signal yesterday as well on a daily time frame. See the little green? That's the band right there. Just to keep an eye on some of these. See, triggered a buy signal right there. So, geez, look at that. Down, up, down, up. Yeah, some of them fails for sure. Not everyone is going to be a cute one. So it's the same thing here. Um, clean this thing out. It's a little messy. Same thing here. Three down. I have it as in a one, two, up in three, three versus one, triple combination down in four, and an extended fifth. Okay, which is very common because you have a shorter wave one, you have an extended wave five. If you have an extended wave one, you're gonna have a smaller wave five that only goes up to 6 1.8, not five versus one, a 100% relationship. So if this is the case here, I mean, I did it A, B, C, W, X, Y, whatever you want to throw it, whatever makes you happy, you can do. It really doesn't really make a difference. Same thing here, one, two. So we have 50%, we cleared yesterday, 61.8, 483, 100% relationship will be a 497. So the 497 will put us right back to this the swing, the high that we had here, which is 493. So 493 and 497 would be the first upside zone, but 61.8 is this is the strong one. And this. So what I'm planning to do is to put a hedge on, okay? Or it's gonna be a short one or something have a little bit downside. So what I was planning to do is that we're coming here. I was I was really hoping that if we can come back up and just retest this 61.8. So from the 61.8, which is the 483, so 483, and just trying to make something to the downside off from here. So yesterday close was pretty damn aggressive. So let's see how we open on Monday and see what happens on Monday, and then we're just gonna um, wait for earnings. So if I don't know if the earnings gonna push us back up, that's what the earnings is gonna. That's how I see it. Is if some of these Mag 7 are the ones gonna push the Qs to the upside. So 483, 493, which is this swing high, 100% relationship, which is 497. So 497 and 5783. So I'm just, what's going on here? So I'm just focused on a 100% relationship for now, right? Just look for a simple, like a measured move. Take the low to the high to this low and just to see. So we'll see what happens. I mean, this is a daily time frame. So we got um, the got plenty of a lot of decisions gonna have to be made before I'm a buyer. I mean I'm gonna stay bullish, you know. Um I've been let me see where the heck it went. Um this is what kept me bullish here since then, since this April 7. I know we have this, but I've noticed that this is the same signal was failed here for three times before. First, it doesn't appear that often. Second is when it does, I act. Okay. I don't ignore this. I've spent a lot of time, okay, making this thing. And I tested this thing with my own real money for months and has very good results. It works, but not gonna work every single time, but it works most of the time. This is the one that's actually kept me so like, you know what? That's it. I'm gonna just stay bullish. That's it. Let's look for a. I don't have any buy signals and this and that, but just stick with the go with the mean reversion. You triggered here, this one, this one, this one. I mean, like, come on, you know. So like we failed once on a second attempt, you're gonna go. It's gonna go. I mean, I could have another down day, fine, but it's gonna go. So we held that low pretty good across the board. This pig right there barely put a double bottom here, but it held. So just which is a very good sign. Yeah, you wanna once the signal triggers, you wanna you know you just wanna make sure the low holds, and then you just need because what you're trying to betting on is now is to the upside. You just wanna wash that low. That's all. That's where the signal triggers on this daily bar. So I mean, looking at the daily time frame, as you can see, swing is up, swing is up, swing is down. This is up. How much do we recovered so far? Now, if you look at the price, okay, what exactly has been doing? Look at a bar, they call bar to bar relationship. What are we doing? 4 days up, 4 days down, 4 days up. See? So this market is is definitely looking more range bound, okay, from the low. 4 days up, 4 days down. Now we're 4 days up. So what are we gonna do? 4 more days down? I mean, if this thing is repeating over and over again, this is this. Now this one right there was 6 up against the 3 down. That makes more sense, right? 6 against 3. Now this one right there is the same thing. 6 up, sorry, yeah, 6 up, 3 down. And now from here, 4 up. You see the difference here? Now compare these two to this side. It's very mixed. Um, yeah, upside is coming. Fine. We're saying that everything is recovering, everything is bouncing really good. Here's the thing I want to show you that I've been working on since last week. Watch these numbers on the top. What I was doing from the last week over the long weekend, I want to see like how much time each swing takes to the upside. What's the minimum time for it? Well, I cannot predict stuff in future, but has happened all this time when the swing turn a direction? How long and how many days does it go up before it turns back down? They call it time signal. Watch what happens. I'll take you back. Watch what happens after every four. Okay. What is actually doing is actually counting higher bars. Okay. That's what you're trying to do is you're trying to count because you are bullish. We can, I haven't done this thing to the downside yet. I'm working on it. So what I've done so far is I'm I'm trying to I know the bar relationships and stuff, but I want to see how I need to plot time to it. Okay. And this is a low, right? You see there's nothing counted here because it was low. Here comes a first, comes second, third, which is the inside bar, four, five, six. So it's keep counting all the higher bars, including the inside days. And then after six, the price backs off. So now let's go back. Let's look at the history of daily time frame of S&P. Now pay attention to number four. Anything is in blank, ignore that. So that was the four. Here's four. Market drop. Five, six. Outside reversal, massive bar for the day. Four, five, market drop. Four, five, market drop. Four, five, huge drawdown. Four, five, six, lower bar. 12. See, that was a massive run. So what do you see here? The average swing that managed to make four higher highs will eventually fail on a fifth day, or it will make one more high and it will fail on a sixth day most of the time. You know? Then it goes back to blank because the lower bar is not being recorded. Then as soon as the higher bar comes, it goes to number one. So once you have a number one after a blank session, you will have number two. So you look for another higher high. This thing is gonna help us a lot now. So the point is now we go back here. We're at number four. Okay. Let's go back here to the lows. That's the low. Up in here is blank. That's the bar number one, bar number two, number three, four, five, six, because it's counting all inside. I can remove the inside, but I don't want to. You know, I I scripted using the inside days. I want to count it as a day as well. I know it's a neutral day, but you still want to count it because the swing has not turned direction on the inside day anyway, so you should count this. So from here, okay, from the fifth, sixth is the inside day, and then the swing turn Swing turned down here after 3 days, right here. Now it turned back up. So anything is red highlighted here, the swing is down. So from here to blank, blank, now you start counting. So anytime when you're gonna see a green bar is gonna have a number on it. So starting from here, the one, two, so that was what? Tuesday, Wednesday, Thursday, and Friday. So that was the whole week we just had. So we got number four. So if we do go back up on Monday, there's a pretty good chance that we're gonna drop on Tuesday. Okay. So because I don't see any day that has ever exceeded my, well, unless it had 11 straight days of a melt up. That's a different debate. But over the year, these are this is a daily time frame. I haven't seen anything that exceeded more than 6. So I was thinking yesterday at the close I should buy some puts at the close. But then I watched the close. I was like, geez, this thing. Then I wrote, I was like, this is a very strong close. I don't know what is gonna happen on Monday. Anything can happen. But at the same time, when you see you see this line right there changing color to green now, it was black here. So it might get a push here. It might go up to a fifth. So I'm planning. I don't know. I mean, I don't want to leave this thing too much because we still have like 3 days left to end the month, and market usually don't sell off in the end of the month anyways. Most of the time, it's trying to recover. So we're like way off the lows. So I mean, this is a this is a very interesting. I'm just like paying attention to kind of see. I mean, we can change this thing to any stock as well. I mean, here, like, this is IWM, you know. See, this is a number 4. This is number 1. Okay. So this is only 1 because it's counting the inside. Yesterday, the diamonds had the inside day. And this is number 4 as well. So now let's take a look at Qs. It'll be very similar to it because there's here and there bars, just 6 down. What I've noticed that because I looked at this C4, fifth was down. What I've noticed one thing is C6 that after 4 and 5, 5 is like the max, I would say. The 6th day, the market is going to drop that day. C6 drop. I mean, doesn't nobody know. I mean, we just need to see if we can take out the previous day low. That's basically what it is. See, 4, 5. Yeah, 4, 5. This time thing definitely it is worth buying a puts, to be honest. I'll see on Monday. Um let's see how we open on Monday. If we manage to make another high, that'll be number 5. Then we'll buy some puts just to see if we can get bit of a back test. One of a lower bar. We can do a spread, or we can just simply buy a put, either or. So I was just looking at a bunch of stocks. So let's do this one here. Here's my other screen. Say Tesla. See Tesla at number 4. See now, look at Tesla now. See 3, 4, 6 drop. See, we can just go back and check the whole history. 5 drop. Doesn't exceed, this is 10. That's a full 10-day melt up. Massive reversal bar after this kind of a huge run. C6, drop, 5, drop. I'm not, don't get it. You're not looking at this, a 10, 15, 20% decline. What you trying to make a case here is to see is that how many number of bars, higher bars I'm talking about, goes manage to go up, then it pulls back. Okay, because I have the bottom ones I have mean those blue signal. Remember that we always use them all the time. That's the bottom thing. I'm working on this damn top thing, which is the most difficult part. Picking bottom is not that difficult, trust me. But picking tops is the most difficult uh, job. See this one, 7. Some of them are just go. Once it goes to the number 4, is this when you start watching really close, basically. You see, look at the 5, look at the bar right there after 5. No high was taken out, and that's the low was got taken out that day. It's just like you see 4, 5, 6, it fails. So it tells you that, I mean, we can do any. I'm just painted like looking at a bunch of stocks and playing around this thing. Like here's Nvidia is at number 4. All stocks right now is at number 4 right now because stock has been up since Tuesday. Every single stock has been up since Tuesday, making a higher bar, meaning, see, this is a 4, 5, 6. Nvidia drops. See, it keeps record that thing. And now on the other side is that every time when you have lower bars, and then when you have the well, swing has to turn up as well. So this is just the top part that I am kind of like C4, 5 drops. So basically, what does it tell you? On the 5th day, okay, of a higher bar, if you manage to buy a put, I think the reward is pretty, like, I think it's a good reward if you take, if you um, uh, try to take out the previous day low. Don't you think so? It's been happening every single time, like 5 days. Oh. So fourth day, sorry, the 5th day at the close or at the open. Well, nobody can predict the open because you're gonna have a lower open. I think on the 5th day of a swing up, I think it's worth to buy a put. That's what this shows. Okay. Unless it just rips like 11 straight days that we just saw like once in a blue moon. It doesn't happen that often. But 5th day, I think it's a time to either de-risk your, like, just to light up your position as well, you know, or you can just simply buy the port. Like you see, like this is Apple. Now, leave the blank part because all we are we looking for is because we're going up, right? All we're focused on is on what? We're looking for higher bars because higher bars includes the inside days as well. Okay. It does not include the outside bars. Keep that thing in mind. Okay. Because outside bars are the most tricky bars. They're very difficult because they engulf. Even Gann said the same thing as well. He says to stay neutral when you have the inside days or inside week. Okay, wait for the next bar to open to see which way it opens. And then on the outside bar, he said the same thing that the decision that you have to just wait for the next bar because you don't know which way the see, like right here, look right there, 4 days, Apple was up, 5th day drop, see number disappeared. It comes up outside bar. You see right there. outside bar. That's what the signal triggered as well. And this is a lot of. So the and then one, two, three, four, four, fifth drop. So this one doesn't record. No, because that's what I'm saying. This is the bar you always have to pay attention to it. It's a very sneaky bar. So this Apple, see this one. See some of these, this one up to eight straight days up. Here's Netflix right now. It's sitting at 11. And Netflix is due for a breather for a day. A bit of a 11 straight days up. Look from here, from here. No, sorry, from here. This one doesn't count. So from here, one, two, three, four, all the way 11. So 11 days. Here's Microsoft. See all four. We're all on a four right now. I think if Monday, if we do open higher, and if we manage to stay up for the day, Tuesday market is going to drop. So let's see what happens. We're going to watch. Okay. Let's go with a 5-day average. 5 here, Microsoft backed off. So just watch, pay attention to this. It's Meta 4, Google 4, Amazon 1, because Amazon swing is still down. This pig is fighting. This is the one that's left behind. Everything else turned around. AMD 4. So there's a bunch of stocks that I have. I might just put it here. Broadcom 4. See, fifth, sixth drop. It's a very interesting time signal. you know. So just I was just like, like bottom part, I know, like, okay, well, the I have that mean reversion signal, right? That is pretty good. It helps a lot. But at the same time, I was just like, I wanna see if the price goes up, how many days it managed to stay up. So if I'm in a trade, I get myself in a first swing, and if the swing is up, first of all, right? If the swing is up, and now we know that that swing just turned up, it turns green because you see it stays is all it's highlighted green now. So if it's gonna have a lower bar, that doesn't mean the swing is gonna turn down. You need three lower lows, meaning you need three lower bars for swing to turn back down. So every time when the swing turns up on a daily time frame, it doesn't back off right away. Okay. So it takes time. So which stock is this? Broadcom. So if you go back here, you see it was down for like 3 days. You see it changes color here. So everything here that you see is all green is when the swing was up. Even the fact that it has couple down bars, the swing didn't turn direction until here. This low right there turned the swing down after taken out because this was the inside day. You see now you have 1, 2, and 3. You have 3 lower low. The swing turns down. So when you have a swing that turns down on a third day, it doesn't go right back up. Swing don't change direction instantly. You can see the how I just like it tells you exactly which day the swing has turned up and which day it turns down and how long it stayed down until it reversed back, the swing turned back up. which is all this green and red highlighted section is going to tell you. So I think it's a very good way to look at a chart. Makes looks a little fancy, you know, and just to visual a chart. Okay, if I have a blank chart in front of me, like open like this on a computer, okay, fine. So I look at a stock. I look at like, okay, swing is up. I don't know, I just put a little banner there. So as the swing is up, things this it's all area is green, right? After so when you have red, the next one's gonna be green. It's not gonna be stays red forever. We all know that, right? Swing is gonna turn direction at some point. So if the swing turns up now we'd see like, okay, well, how long it has been up so far, you know? So that's what we calculate time. So I'm working on this thing to the downside now as well. So it's gonna take me a few days. So I'm gonna have to think and see how I'm gonna label number wise to the downside. I might have to plot something here. So keep the ones going up to the upside and just script something to the downside here and then keep them here down. So when you have um, drawdown, you will kind of have an idea how many days. You see, some of them are pretty brutal beatings. See, 3, 4, 5, 6 pop. Not that much, but that's 2 point pop. So basically what it tells you that 5 days, okay, including the inside bar, okay, if you buy puts, I think you have a very good probability you're going to cash out something the next day by the close. We might get lucky at the open, or we just write the session down. That's how I see it. I hope you get my point. I think 5 days is is a pretty good, because I've been looking at like bunch of like stocks, like big names especially. I'm not worried about something small, but I'm like stocks that are liquid. Stock has a lot of volume. A stock has a tighter spread. Those stocks, I'm just, Mag 7s are always going to be in the top of the list. Just to take like a 10, 15, 20 stocks as an example to see like how does it actually these stocks trades and how many days that it managed to go up before it kind of backs off. So if the swing is up and if the stock does come back down after 4 days or fifth day, and as long as the swing is up, I think we can definitely consider to buy something, you know, as long as the swing is up and then you just stock was up and just pulling back. So that pullback is as a buying opportunity as well. Because if you missed out on a run, now the stock is pulling back, so as long as the swing is up, not on the swing down, that's gonna be a totally different story. Um, I know I'm crazy. I'm always doing something. This is what is that? Growth value. That's the rotation right there. That's the growth chart here for an S&P. This is the value. So both swings are up. You see, like, you know, what can happen? Well, I don't know that, but this week has turned a lot of things around, so just to keep that thing in mind. Um, what was this? Oh yeah. I don't know if you remember 2 weeks ago we were talking about to touching the line, remember? When we had this low and we made this line right there came all the way down from this. And then from this high, connecting this high, you see it touches right there. Now I poked above it. So This. Oh, that's a linear. Yeah, this market has a bit more upside, man. Seriously, I see it. The linear band puts us right there to this 57 mark. That's a two standard deviation move. There is a gap here at 55.71 that needs to be closed. 55.25, 55.71 is the gap. You see, here's the thing what I wanted to see. Where's my chart? This. This is a chart. What I mean is by this is this. You see what happened here? Remember I always talk about channels? When we made this low and this high right there, which is the 5.5% move, remember I draw this channel and I was like, I'm not gonna move this channel, right? And then we had this throw over. So we have a throw over here. See, the price made a mean reversion back inside the channel. And I'm not moving the channel at all either. I'm gonna leave the way it is. Now what you see here is you want to see this. Remember the Newton's third law of motion? That every action, there is an equal and opposite reaction. And it works exactly the same way when it comes to channel. When you have a throwover on the upside, you get the same throwover to the downside. When you have a throwover to the downside, you get the same action to the upside. That's exactly what his third law was. When the this he clearly said it's like when an object exerts a force on another object, the second object exert an equal and opposite force back on the first object. It's a very interesting law that he wrote. I mean, I've studied physics. It's it's a very I've seen it happen like thousands and thousands of times. Okay, it's just been from the currency market. I always watch when the trend changes direction. Okay, to mark the low and the high, and just leave the channel, and then you can just leave the way it is. So, and then if the price, nobody knows where the price is going to come down and how far it's going to stay down. But basically what it is like if you just kept the same channel, okay, and then you got a massive throwover and you just came back, you see, you came back, you hit that channel right there as a back test. Then you came back down, and then finally you made the mean reversion. The point is that the price needs to make a mean reversion back inside the original channel where it was. It went right inside, came out, went back inside, slightly came out, went back inside again. You see, it's fighting that same channel, right? It's just trying to make, that's what they call a mean reversion, trying to make that move back inside the channel. So what do you expect from here is to see what is going to happen here now. That's where the Newton law comes into a place. So when you have a throw over here, you expect a throw over here. That's what you call same opposite reaction on both sides. So this is another way for you to look at the price. If a stock has going to have a huge thrust to the downside, is to expect like, okay, fine, if the stock will, the price will find a support somewhere, it's not going to zero, right? It's gonna stop somewhere. If it takes day, 2, 3, 4, 5, 6, 7 days, whatever the thing is gonna stop somewhere, and then when is the price is gonna make that mean reversion move? That's when the signal comes into a place. Okay, let's look at the stocks, and then we're gonna be done. Time box is good. This is center grid. I always watch this one. I wanna, if a price, that's the low right there, this is the high, that's the center of the grid. You wanna make sure that the price stays above the center of the grid. You have a much better chance of price to rally to the upside. But look when the price comes back down, how it manages to find support with these lines. Look at this. See right there? Look where all these lows are. Like, look at this one. It's crazy. It's an excellent way to find a support and resistance. That's exactly what these lines are for. See, it's a traditional method of squaring price and time. The box divisions have diagonals, grid lines, forward angles, and reverse angles, and a because I set it up as a 2 standard deviation. You can expand them more, but there's no point for it. No, no, price don't really move that much. We had 2, 3 standard deviation move, but two is just normal. Um, so we'll see. You see this, any upside that we have from here. Now let's say if I take a center point, put it right there. See, it gives you a 5613 kind of. So 56 to this line. So you have a bunch of intersection. So that's a one way to look at the upside and to the downside. I was doing the cube thing the other day. Okay, let's do I think I already ran a scan. Let me see that's the outside. No, this is the one that I did. Yeah, there you go. These are the 57 stocks has triggered the mean reversion signal this week. Okay. So, I mean, look, I can show you guys a bunch of things, but some of you are way too aggressive and wants to trade every single day. I don't have a habit of trading every single day. I just don't do that. Um, these are the 57 stocks in the S&P 500 list. Okay. Now, every single one of these stocks on a weekly time frame, okay, the swing is going to be down. Okay. What we're looking for is to take a signal, trade from the signal, and see if we can get the upside. Okay. We want to buy something low at the discounted price, right? So there are good stocks here that we can definitely, because I know there's so many damn earnings are coming. So I mean, I'm watching. We just only had 1 week, so we still have plenty to go. Okay. If if you like a stock, if you have interest in that company, thinking like, hey, I see this company has a potential to move, this and that. You say like, hey, I always wanted to buy that stock, and now I got, like I should, like whatever your thing is, like, there are certain stocks you always thinking like, hey, if I could get this price, I would be interested in buying that stock. Everybody has that. Like they're all, but they have their favorites and thinking like, hey, if I can, it's a good company, good balance sheet, has a good, it has a potential. Yeah, the stock got beaten down, this and this, but I see the turnaround, in the near future. So this will helps a lot. Okay. I cannot throw a 57 leaps on a board. I can, but some of you cannot even handle it. But I think either doing a 90-day, because these are weekly bars. Okay, a weekly bar is based on a on a two standard deviation move. Okay, or it depends if the stock might only get a one standard deviation move for a week. I don't know how much the stock will move just by like looking at a two standard deviation move just on an average gives you an idea like, okay, well, what I would be looking for if the signal holds and if the price will make a mean reversion. What you're looking for is the same signal we always talk about, is this mean reversion. Okay. It has a history of the stock, that how it has done before. Well, nobody knows what is going to happen here. We all can see what has happened before. This is all blank. This is all, we can just make a wild guesses what is going to happen. So let's go back here from the top. These are there are 57 stocks. Now, this is a scan of 500 stocks. Okay. What you're trying to do is your number one target, okay, to the upside is going to be this blue line. Okay. Now, let's take an example of this one. This is Agilent Technologies, right? That's the second one. When you have a second triggered like this, you have a pretty good chance that you gonna stock will be fine for the next 2, 3 weeks or so, moving to the upside. So the last one, see, you have to look at this way, like these are weekly chart. So the last one was back in July 14 of 2023. Okay. It's not something that buy sell signals or something that you see often on, I don't know, 10,000 different softwares out there that sell you like all bunch of different signals. But that's not what it is. This one is you are looking for a bargain price on a company that you like, or if you just simply wants to do a technical trade, okay, or if you just say like, hey, or you just want to buy shares, don't want to fight your life over the time, and thinking like, yeah, I have enough money that I can just buy a share. I can just see if you can ride this thing up toward your target. Okay. So um that's what you're looking for. Now I'm gonna place trades. Okay. I mean, but I have massive earnings ahead of me, and we'll see. We just gotta have to narrow it down. So we'll see how much we can play. um so this one is so your target is 118, okay, on this stock. The price is at 106. The weave up right there is sitting at 121. Okay, so if you target 118 and 121 to the upside, I think is an excellent target in incoming weeks. Okay, so we're just gonna target here. So if this breaks, our next target is gonna be this one. Remember, these are those pivot zone that I would always wanted to see where the, because what I see in a price is when the price when the price makes a mean reversion, okay, the mean reversion price is reverse, okay, at least minimum to this mark, okay. That's what but that doesn't mean that the next week that the stock cannot come back down and make another low right here. It can, but that's not the point. The point here is this mean reversion signal that trigger on this weekly bar. It's going to stay where it is. It might gives us one false low and then it's going to turn around. I think some of the earnings and this one is going to be good as well because they're due for a mean reversion. Keep that thing in mind. So it has a pretty good chance that these stocks are due for some sort of a pop or a relief rally or whatever you want to call it. But if we look at the direction of the swing is down, of course it's going to be down. Every single one of them is going to be down because these stocks have been taking quite a bit of beating for several weeks. Okay. I don't know the liquidity on some of these stocks. I don't even heard some of these companies, but it just scans. But it is one of a stock of a 500 companies in S&P. So it scans all 500 stocks and it's going to narrow it down to only these stocks that triggers this. So your signal, like, so your upside, like 118. So how would you buy this thing? Okay. So how would you buy, like, I want to get to my target in the next 2 weeks, 3 weeks, 4 weeks, 1 month, 1.5 month, 2 months from now. I don't know the time. Okay. But target is this. And we're going to see a couple examples that how many of them already reached that the price already. Okay. So I'm going to give you a pretty good idea. The price will make a move at least to this price. So if you happen to buy a leap, I don't know this option, how to look like, let's say like 115 or 120 leap. Okay, you can go like 6 months out because these are weekly bars. So you're gonna have to buy a lot of time though. You have to keep that thing in mind. These are not daily bars. There's a one full week of trading that will complete whatever like how it opens, what the low is gonna be, what the close is gonna be by Friday. So there's gonna be a lot of time. But I think like if you focus on building something that you can just let the money work or just looking as a trade because you're always looking for trades, right? We're always looking for opportunities. I think it's a has a great way to gain some access, like to to have an to have an upside exposure, and then you would have a risk on the board to the upside if the market rallies like the way the market is just making the crazy rebound. Like these stocks definitely will come alive, right? Because it's gonna lift the whole overall market. Even the beaten down stock, which is basically due for a mean reversion, is gonna start to take a is gonna start to move. So like this one, AMP, see, is the last one was triggered here. Look where the price came and hit the mark, and this. That's the so there's some of them are already it's in there that has already made that move up. Here's Amazon. Look, triggered here. Boom, 186. Next Amazon upside is 197. Sorry, yeah, 197. 197 is this middle point that the VWAP is right there, 197 as well. So 197 is the number on Amazon. Write that thing down on a piece of paper that you'll remember. Okay. So you have, I don't know, whatever Amazon backs off, the swing is down. Now remember, this is the only stock, even on the daily time frame on a Mag 7, swing is down as well. We just looked at it earlier. So this is the weekly that we're looking for. I like weekly time frame. You get a good read on a price on a bigger time frame. But how much it come back off, how much it backs off and stuff, well, I don't know that part. But the point is, like, we're trying to play a signal, we're trying to get the upside. Okay, so Amazon 197 VWAP and 197 center point. Okay, so you have that. Then you have Arista Network 87, and then 90 is the VWAP. Okay, so you have 77.91 close as of yesterday. I think these are the really good entry points here. 5 MA right there, 72. If the price does, I don't know if it's going to come back down or not. But in a week, it can. This is a weekly bar. This if this 5 MA, moving average, can all see if the price can make a move here. So your upside targets are just what you're focused on is these ones, 87, 90 is the weave up, this. That's your target. So you're trying to ride something from here. That's a 15% upside, you know? Imagine having a whatever 75, 100 delta trade. Beautiful payout. But it's gonna take time. Don't expect this thing. It can happen then next week. We don't know that. But the point is we need to get here to this number or we need to hit a VWAP. Okay. So if you wanted to buy an individual leap, you can just simply look for 85, 80s. I don't know how their chain is. 85, 90, if it is a 5 point widespread leap, you can do 85, you can do either 90 leap, and you can just let it work. Let it work for 6 months, who cares? If you don't want to do a leap, you can always make a spread. If this is 77, you can do like 80, 90 spread. It's a 10 point wide spread. Leave for like 6 months. Nothing is gonna happen for the six. It's just a matter of like how much risk that you want to carry on the board. But the point is that the price eventually will make the move back to this number to test the Viva. That's what the signal is for. You know, when was the last time it triggered? This is a weekly time frame. There you go. Look at the upside. And now it triggered again. We don't know that it's not just gonna go like this. But look at this signal from this bar. How much upside that you can get off from this. When I show you a chart and you see something, do you see this? You should be watching a price like a hawk on a discounted price. Watch this one. I don't know about some of these other stocks that are, what the heck is this? Yeah, kitty cat. Here's a Caterpillar. 325 will be the minimum upside print I would target on target. Sorry, on Caterpillar. You have the most, if you notice, most of these stocks, they triggered two of them in a row. They're 2 weeks, 1 week apart. And these stocks are ready to take a move, ready to make a move. Cart, you see? Look at that. So if you bought it some like this triggered here on this bar on this week, if the next week, meaning a week before, if you buy something here, I'm just giving you an example. Look where it hit the price. And yesterday, no, I don't know when it backed off. It just kind of backed off at one point. It's just a low ATR play. Carnival. It's moves like 3 points on an average. That's the target right there. The weave up is all the way up here. Don't worry about the weave up. That's just this blue line. That's your minimum upside target. I've done hundreds of trades. I know what to look for. This is Cummins. Made it here. Still got a little bit more room to go. CRM. See, almost there. Almost there. 271. And if the price does clear this, and then your next upside would be this, and then just your weave up sitting right there. These are great way to look for bargain prices, man. Seriously, if you that's the deck, man, stock is taking a crazy beating. It's gonna take some time. This kind of a punishment for months. Yeah, stock just you gotta be really careful. You see like how price is so basically confused after taking this much beating non-stop week after week. Yeah, you want to see at least a good, if you can see at least a, look how close it gets to this mark. So,
Oh, can you show PNC and NetApp?
yeah.
Yeah, NTAP.
Well, I'm going by one by one. Wait,
Oh, you're going one by one. Okay.
there's only 57 of them. We'll just go one by one. So we can, for that's why I'm going to just find something. These are, I mean, I don't know. I mean, I try like five, six of them, and three or four of them pays something for sure. I mean, it doesn't look, it's like everybody has a different risk tolerance. Okay. Some of them are aggressive. Some of them expect to think that they're just going to wake up, jump on the market, and they're going to make their money in 15 minutes. They're going to call the day. They're the ones that are going to be fighting until all day until the close. So you don't know how your trade's going to play out and how the day is going to go. So overall market is what we all watch more than the individual stocks that impacts the market. So it's, I mean, discounted price, buying leaps. Some of you guys have a smaller accounts who wants to build something. I think it's an excellent way to look for an upside. Price got beaten down. You know this, that I know it, that eventually, if the swing is down, it's not going to stay down forever, especially in the good companies. Okay. If a stock is liquid, stock is a big company, it's going to turn around fast. So I don't even know what is that. So this is 188. I have GNRC, but that doesn't mean that this is the low. I mean, it could come back down as well, but that's Google. Look where yesterday Google backed off. 165.94. Look at the VWAP sitting at 166.25. Backed off here. It's a good stock to stay long. It's gonna break through it. Look at the beating that Google took. Google is got about plus they did like I don't know how many billions buyback. Put the watch on. The the it's gonna go. Google has upside.
And Google has the SpaceX shares.
Oh wait, how much of a buyback they did?
Google, I have to check.
Yeah, they're good. So this is a global payment. See this one feel. I always like to see if you just gotta trigger. You gotta hold that low. So you did the same thing here last time. One here, and then see it gives you 2 weeks back. This is crazy. Back to back. So it's crazy stock. Back to back outside weeks. Okay, false break to the downside to retest the low and then took off. Global payments. Some of these leaps, I mean, hey, if you have a decent account size, I mean, if you could leave some of these leaps out for like, I don't know, 9 months, it's still gonna pay something. I mean, if you don't, if you're a stubborn and don't want to wait, you can always close the trade after 5, 6, 7 points as well. That's your profit as well. As long as the trade moves. But as long as you have time, I think it has a very good potential. Hilton Hotels, very close to 25. Yeah, they just narrow it down. I mean, it just, but we're gonna see how many of them they go. So that's 66 in hologic. I don't even know what is that. That's honey 203. Honey has a weave opposite and where 215. Again, it's gonna take time. Don't expect this thing to move next week or two. These are weekly bars. Weekly bars take host hotels and resort. Yeah, because I don't even know this. We're gonna just get over there. I don't know these companies. Jacob Solutions, Air Lennar. Just low ATR play. There's Lowe's. Lowe's is good. 237. 237. 249. 2 and a half. Yeah, 218. Oh, okay. So that's a 200. Oh, that's the thing. The thing is fighting for. That's that this red line right there. That's your 200 EMA. Look, it's not. It's making these false breaks to the downside, but it's not closing below the 200 EMA. Watch this. 215 number on Lowe's. Stock right now is at 220. It's only a 550, no, 15 to 10 points away from the 200, but it's not, as you see, it gives you that big um, hope that yeah, what is breaking that 200 EMA here. Look where it closes. Came back here, close. Retested again the lows, but you see, it's all pins right there. That thing is closing below here. It's fighting. It's fighting really, really hard for the last 3 weeks. So I go there all. I'm gonna actually go there and come next. Um, I gotta buy outside those two of those lights outside. The landscape lights went off, so I gotta go buy two of those. I like Lowe's more than Home Depot. Home Depot is a fish market. Lulu 301. That's something to keep an eye on. Marriott getting close. 243 mark. Interesting. You have a Hilton and Marriott. You got both. 219, 225. And then Marriott 236, 243. Moscow. Work. Work. I did a trade on this one, I think this month. It was in a smaller time frame. Mark triggered one. No region. I don't know. You guys like some of these stocks. 17, 18, net app, semiconductor here. Whoa. This one is, this one was good. That's too many. 40, 49. Point move. The stock moves 7 points on average. Oracle, 145. VWAP, 158, 155. Some of the, man, the real reward on these, you know, is to make a spread to pick this strike and sell this one. Like meaning to buy the call and sell a call. Those are the ones gonna have an insane payout. Gonna have a lot less time decay being in a vertical spread. It's over a leap. and just wait for the trade to play out. It's very well. I've done it very few, on a lot of trades just to make a spread. Take a call. What you're trying to do is just you want to bring the call in the money anyways. So you just pick this much cheaper spread cost wise, less time decay, has an excellent risk to reward if the trail start plays out in a couple weeks, you know? So 145, 155. So 145, 155 call spread in Oracle. One is gonna hit 146. Well, I don't know that, but that's your payout. That's the way to play this instead of fighting a single, because single leaps have time decay, that's the problem. Plus the cost is higher because the premium is gonna cost you like more than making a spread. But as soon as you're gonna sell a call against it, it's gonna eliminate the time decay and is gonna give you a much lower premium. And then you can just have to adjust the number of contracts, how much delta that you want to carry. You want to take, if you want to make a 50 delta trade, so if you ride from 140 to 145, okay, so that's a 5 point move. So if you have 50 delta trade, the payout is $250. Simple math, minus the time decay. So if you're going to even have 6, 7, 8 months out spread, which you can close at any time. It's just a matter of like when you're gonna get the 5 point move to the upside. It can happen Monday. You're out of the trade. That's it, done. I reached my destination. To me, just you know, a, a trade is like when you trying to structure a trade. If you want to go up, okay, where do you want to go up? Because there's a stock that is coming down, it's just not gonna just make a V shape like this. It's gonna take time because it's been taking so much beating. Plus, on top of it, you don't even have a swing confirmation for the for for the swing to show the swing is actually up. You have a clear direction here for swing is down. Your only attention and what you're trying to do, you're trying to buy a bargain, you pay a bargain for a price, and you're looking for a mean reversion to see if you can get here. That's what it is for. That's it. That's your whole game plan behind this trade. There is no swing direction. All you have gonna have a bunch of 200 moving averages, and you're gonna have a VWAP sitting up there. You can just gives you a pretty stiff resistance, which is right there. There you go. Look at that. The VWAP is gonna stop the price. I know that. They just has to clear this thing up. His 200 is sitting way down here. So where we were, Oracle. PK
Mo,
on.
Mo, you skipped NetUp.
So this one right there, NetApp, that's a nice, very nice, strong weekly bar. Beautiful close. Now the first hurdle for this one is 90.52. This is a 200 EMA. See, it closed below 3-4. It's been 1 month now. Okay, the stock has been closed below the 200 EMA. So this stock has to do a lot of work. Need a very strong push to close above the 90 print in order to get to 96. So this is going to be a tough one. You either wait for this thing to break and close, to look for this upside. Yeah, this is tough, You see, like it has an outside bar here. Then the next week, price does came. See, it closed here below the 200 EMA. It didn't close here. It didn't close here either. See, so it tested a couple times. This week, it took a huge reversal bar and it closed below it. The next week, it came back up, retest the 200 and took a full flush down. I don't know what happened here. And the next week again. So now he's trying to come back toward the same 90.52 mark. So this is gonna be a tough one to fight to the upside, I can tell you that. PNC, same thing, 200 EMA, you see? Once you will have two weekly closes below 200 EMA on a weekly time frame, and you're gonna have a you have to fight fight pretty hard to make your way up. It's gonna stop because it has to stock usually takes quite some time, several weeks, to fight and break that 200 back again. 200 is a very strong moving average. So it's a PNC. I have an account with them. It's right by my house. Um, PayPal. That's a good one. I was looking at it yesterday. I know Ruben is in this trade. He has a spread open. There's a 70 target on this one. Yeah, I hope that this trade plays out for him. 62 is the 5 MA. So on a PayPal 70, 75 spread, I think it's gonna have a reward. Out of the money, way out of the money, yeah. So you're 65, 70. So it's a five points wide spread from 70 to 75. So you can catch 65 to 70. I think that would be a trade. It's a nice trade. It's way off the low unless it's not gonna dump back again. But I think this one should have some move to the upside. 70, 75 spread would be the ideal play on the PayPal to the upside. Yeah, some of them will go. You can't miss all. I mean, I don't know how many you can play, but look how Price is trying to getting close to that print. That's the line that you want to target. That's it. What about this? I don't know. Target. Target a nice outside. I'm sorry, the nice weekly bar. Target 117. Target might be an earning move. But retailers takes a couple weeks, then all the retail stocks gonna come into play. I think this is the one might get a pop on earnings. That's how I see it. 1997, a 7 point move. I'm interested in this one, Thermo Fisher. Um, Look at this stock. I'm gonna compare it. Very first of all, there's nothing bearish about this stock. Okay. That's your high here. This is some sort of a complex correction. This is just a range bound. I know it's going to be a painful to trade a range bound stock with options because this sucker can just stay like this for a very long time, because it can chew a lot of it's a long consolidation. So this stock is in a distribution phase. Okay, it has an accumulation phase all the way back to the upside, and now just literally sideways since October, since 2021. We're in 25. So for the last, what, 4 years, the stock has done nothing. I mean, it has moves that it's made back and forth, but it hasn't really done much. This is something to buy. And at the same, it actually, matter of fact, it just triggered this. You see, the last one was here. This one is a really good one. This one. Now, if you look at this, there's some news or something is gonna broke out. Look at this and look at this. See when you have two similar close to it, one after another. goes. Price goes, after two. It's couple weeks gap here though. Keep that thing in mind because when you have drawdown, this is a very like this is you look at a 200 EMS in a 518. That's a long way to go up. But it's a good company. If should be a nice like a long-term hold. And it's not a cheap stock. It is not a cheap stock, $424 share. But looking at the stock, you see massive accumulation, and it's just in a sideways consolidation here for the last 3 years or so. Look at this upside, God. Whew.
Thermo Fisher was typical COVID stock.
Huh?
It was a COVID bull stock
Oh, it was a
because
COVID
of,
stock?
yeah, because of all the testing
Oh,
they do.
okay. Yeah, that is dead. I don't even know. Tito price 88.96. God, man, this thing takes years to give you to give you this. Tesla, look at that. Almost there at 290. Man, Tesla fighting this one, this one, this one. Mm, look at that. These are all triggered yesterday when I run a scan. VWAP is at 313. Tesla got some work to do. US Bank, 42. VTRS. That's some cheap play. Oh man, it's a one point now. Thanks. Williams Sonoma and my stock that I killed last year, Zebra. Look how much it gave back. This is I would buy. I'm gonna be looking to put out another trade on this stock. I rode this whole thing up last year. Remember? I just the wave count was just not. It's this I hope it holds this low, but that still doesn't do good because it was such a because the way the price was, I don't know, I have to look at the sheet what I paid for it. When I starting to see this, I was like, this is definitely forming a very nice cup. But look what happened. Yeah, I might buy this one again. Yeah, this is I don't know if it's an earning hit that stock took. That's a massive, huge hit. So from 289 to 208. That's an 80-point drop on a one single bar. That's huge. It's a massive move. At 290, you'll be 290. Weave up is at 296. Some good news can break out on the stock and move back up. 200 is sitting all the way. As stock has definitely got beaten down pretty hard. 200 is right there, 315. Okay, this is it. These are the 57 stock. Outside bar. My it's, God, I'm blind or something up here. Outside bar. Look how many stocks has made an outside reversal bar. 256 stocks out of 500 stocks has finished the week with an outside bar. Broadcom, AbbVie, Accenture, Adobe, Autodesk. These are the common stock that we follow, right? Arista Network, Broadcom, AutoZone, Booking, BlackRock, Caterpillar. As I don't think I've ever seen that many stocks. Chipotle, Salesforce, DoorDash, Dayforce, DuPont, Dell, Quest. Every single stock has made an outside. Freeport, Fifth Third, First Solar, GE, GoDaddy, Corning, Garmin, Home Depot, International Paper, like this crazy list. How many stock has put Lindy? It's a huge company. Those, we just looked at them, Lululemon, MasterCard, McDonald's. These are big names. 3M, Moderna, NASDAQ, Northern, this, ServiceNow. Huge weekly bar. Palo Alto, ACOM, Palantir, PNC, Supermicro. That's crazy. How many stocks has AT&T, Biotech here, Thermo Fisher, Tesla, Take-Two, United, Uber, Union Pacific, Bancorp, Visa. The list goes on and on. Workday, well, it's just it's crazy, Zebra. It just that's a lot of stocks. How they finished this week. And if you notice S&P, and I did this one, you remember, I can go to the weekly here. Let me do a show bar. See, you can script this. You can do a bar type, outside bar. That's it. So these are the colors, red or whatever. Now these are the outside bars S&P had per year. So this year we had two, this and this. Last year we had 1, 2, 3, 4. A year before, 1, 2, 3, 4, 5. This one was 1, 2, 3, 4, 5, 6. That was the bear market 6. Remember we talked about that 5 number before? A very common number on the market based on the upside and to the downside, especially on the S&P. Remember the number 5. if the S&P is up for 5 days, you have a very good chance they're gonna drop on a 6 day. If it's down for 5 days, it's gonna pop on the 6 day. Yeah, there's a two. So if we go back a year to year, like what is the average here? 1, 2, 3, 4, 5, 6, 7. This one's 7. This one was 2020. 1, 2, 3, 4, 5. That's the COVID low. 1, 2, 3, 3. If you look at look how much market, if just to look at like how much of the actual market moves on one calendar year. It's all here, you know? Like it looks like or it seems like just like market is moving so much. But when you look at a weekly time frame and when you actually see like how much the market is actually starting to move a lot more since COVID compared to how it used to use before. And I know that because I've been trading around here from this the way back here. Look how much of the market used to move. Just look at the range here from peak to trough each year. Not as much as 1 year. Think about it. One single year, people can think the world is coming to an end after a 10% dip. And look how much market moves now after COVID. That's like huge ranges. You know? Does this weekly signal show up? What do you mean Mondays and Fridays? No, I was only looking for those outside bars. How many outside bars the S&P had over the course. We can actually I can change I can color it. This there you go. Now you can just look for blue bars. So all the blue bars here will tell you exactly how many weeks the price has made a house. Now, if you notice one thing that what happens the next week when you have an outside week? Most of them that goes up compared to come down. Like here was up on the top, right? Came back down for 3 weeks. This was here in the middle, took a massive flush down, right? This was here, false break, rip right back up. This one went higher, lower, higher, higher. One more week down, one more week down, higher, down. It's a huge reversal here. Yeah, it's a very tricky bar. I know that. Because the problem is that it engulfs. You see, it took out this. See, it took out this previous week high and it took out the previous week low. So it engulfs. Also, when you have a lower bar, you just break this, you just took out this low. You didn't take out this high. So you just made a lower low. And these are not very common bars. You see like in 1 year, it's easy to say 1 year, right? You get to see like 4, 5 max. So we have two, so we have another 3 more coming, or at least three more coming this year. So we're done with two so far. Yeah, these are very rare bars. Call it volatility bars because they're because once you have a lower bar, it just stays down red throughout the whole week. It can only engulf, then it'll turn blue. So when what was the open here? 52.32. The low was 52.20. You see what happens? So the open was 22.32. The little banner right there. The last week low was 52.20. So you're talking 3 points. No, 12 points. 20 to 32, 12 points. So you're talking about 12 points to take out this low. So it did that. You see, it went all the way back here, and the bar turned red. And then from here, that since Monday, so Tuesday, this reversal came all the way back, took out this high, 50, 55, 40, 50, sorry, 54, 59. It turned blue. And it engulf. That's all. These are just tricky bars. I know that. But these ones on a very top of the range on an uptrend, I mean, it can turn things around pretty quick. You know, the ones they're not in the middle, they're always hard to figure out which way the next one will open. But when it reaches the top, like look right here. Okay, look right there. Here, this is actually started the bear market in 2022. Yeah, these are very dangerous bars. I know that. See, look, they formed in the bottom down. Look at the COVID low. Huge outside bar. This one, the Fed says that I'm buying commercial paper. You can call on my friends like, dude, buy the market, man. Wow. I've never heard such a thing. That was crazy. Fed is buying SPY. Can you believe that? They were in ETFs buying SPY calls. Wow. Would have taken a second mortgage on this thing just to. I don't know when that thing's gonna happen. Imagine. I was Fed was in SPY calls. Think about it. Fed. Unreal. Okay. I think we had enough for today. Um, I'll do the I gotta have to do the individual. It's better to I'm gonna stop this video. I gotta do the it's better to let's see the thing is this. We didn't talk about it. Yeah, we see this is all rosy. Good picture, looks nice, right? Looks pretty promising. Uh, we've been up for this is 3 day swing up. This one right there has been up for holding a upswing for 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 days. Okay. That this is just the higher bars. So it's been holding for 12 days, small cap. So it was down 20, 25.6, 13.8. The daily looks good, right? And I mean, for swing trading, daily time frames, it's and 1 hour is the way to go. But if we look at a weekly time frame, swings are all down. So we don't, I mean, we don't even have a higher bar. So this in this is the outside bar, outside bar, lower bar. Okay, see this one didn't put a it didn't put an outside week like the other two. This is an outside week as well. So these three did, not this one. But look what happened here. This is a weekly time frame talking about. And now if we go back here and we're up, like this is the extreme range. So this is shows that we're up 14.27% off the lows and down 10% from the highs. Up 1744, down 12, down 11.19, up by 9.47, up 13, off by 20. So this one is always going to have more work to do. So I don't know. Does it look a bearish market? Absolutely not. You have an S&P down 6% year to date. You cannot say this a bear market bounce. There is no such a bear market bounce like that in such an extreme range to the upside, but we'll see what happens. This is just, I haven't, I'm starting to act. I mean, I took a punishment on these 2 weeks, I'm not gonna lie. But go signal failed. You see, it actually triggered a go signal here as well from this little blue, and that one failed as well along with mine. It's okay. That was a 2022. This one, this one. Look at that. Some of them are nice. Oh man, how many years it took. Yeah, it daily definitely has on the indexes has a pretty good results. Weekly is a very long time frame. 1 week, man. Come on, I gotta go through 5 trading days. But this is what, keeping me optimistic and bullish, to be honest. Just this. If I wouldn't have this, I mean, I don't know. It's gonna, well, we'll see.
So now the signal time on swing that you were talking about, is it the mean reversion that you went through?
No, no, no. The mean reversion is this. That this is a time signal. Time signal, it records how many higher bars on the uptrend. You know, this is a time. So basically, it's kind of you see higher bar one, higher bar two, higher bar three, higher bar four. So it will. So if we let's say
So,
Monday we would
oh,
have
okay.
yeah,
Okay, so if five days up on S&P, 6 days down. That's the time signal you are talking about.
correct. So if you notice this, that after every 5 days, okay, the market managed to either take the next day down or it just either it's gonna take a pause, you know. But what I've noticed that most of the time after 5 days, if it happens to complete 5 swings to the upside, the 6 day is gonna be down. But that doesn't change the direction of the spin, the swing. It's just you're gonna have a down day. So the point is like the the market goes up or the price goes up and how many days the price managed to stay up before it takes a day down or 2 days down. So when it records another day up, then it goes, you see, like here, 5 down day. Next day went up to 1, 2. So anytime. you're going to have a green bar, including the inside days. Okay, number starting to rise. Okay, 1 here, 2 here, 3 here, 4 here, 5 here, 6 down. Then just one blank until it made a higher bar, which is right here. Start 1 again, 2 again, disappeared, third and disappeared. So it's not you're not fighting each bar. You first of all you need to see what is the direction of the swing is, right? We're doing a dip buying based off this, but it's very hard to fight a downswing because the swing is down. If the swing is down, swing is down. So when you buy, so when either the price takes an extreme beating to a certain level that these conditions will get all met to give you a sign thinking like, yes, there is a potential bottom, that the price will make a mean reversion back toward the upside. So that's what it is, because we don't know the bottoms are, we don't know what the tops are. What I'm trying to calculate is that how many number of days a price rises to the upside before it takes some sort of, a breather. But that doesn't mean, I mean, stock can get hit any time on any news or whatever, something's going to come off. A stock can be up for like 5 days. It can flush out everything in one single day. This is the ETF. It's not going to happen. But like on a stock can, it could be an earning surprise or any news. Stock can just open down here like this. But I mean, we're talking about the overall market. But you don't see that. What I've noticed, and I'm just like going through a bunch of other stocks and stuff, because downside retracements and stuff they're not that difficult, but it's just to see like if I'm in a trade and if I manage to ride 4 days, let's say, okay, in a trade being in a okay, I have a trade that's starting to move and one day's up, I'm holding the next day, okay, I can see the stock has been up for 2 days. If I see like okay, if I'm in a trade that is rising for 4 days in a row, I would 100% book profit or cut the trade on the fourth day. Okay. Because on a fifth, because, well, this was 5 and 6. This is different. After 6 days, you, you're going to take a leg lower. But if you look at the, the color here, it's all green. So it doesn't mean that it's going to change the direction of the stock, but it's just a matter of like, can you hedge something? Of course you can, but doesn't but that doesn't mean is one single candle sorry, the bar is gonna turn the direction of the swing. No, it will not, because it will need two more. So that's what happens here. So it went up 6. Here's a 1, 2, and 3. Swing turned down. And it's still down, as you can see it. Even the fact that the price managed to rally is starting to go up, but it's trying to record 3 bars. It doesn't have those 3 bars yet. You see, 1 here, 2 here, lower bar. It doesn't count. You need 3. That's what they call 3-bar swing. You need 3 higher highs for the swing to turn a direction. You need 3 lower lows for swing to turn the direction down. You have to wait 3 days. So when the swing turn a direction, it doesn't instantly reverses into an opposite direction right away, because now the swing is down. So now if you go into a smaller time frame, then you will see a lot more uh, swing moves. See, now it's constantly changing left and right. See, swing turn here on the 1 hour. stays up all this time until the swing turned back down here again. You see what happens here? So you swing down bar, down bar. See, it didn't open a third one up. So it doesn't get recorded until here. The three bar. So when I wrote did you read the thing that I posted on the education channel? The two bar and three bar. A two bar, I don't do two bars because it has too much noise, you know? So if I do change this thing to a two, look how many swings it has, you see? You could have a lot more swings here. It's gonna turn direction way faster. Look at this. It's a 15-minute chart. People use them. I don't know how many people actually do this, but it's the two bar. You're gonna have a lot more swing fluctuations here. Now, if you go to a three bar, look, it gives you a much better read. It's gonna give you a much better signal. It's gonna give you a much better trades. I've tried them both. I was like, screw that. I don't want to deal with two. People use two bars if you are like scalping. So if you go here on a 15-minute time frame. Now, if you want to play a swing, say, so you have a low here. Now you have a high here, and that's what you're trying to do here now. Now you want to target this against this low. So that's your trade. So if you want to target like this, find entry here to target this. You can. That's your trade on a smaller time frame. Now, if I go back here to a 5-minute time frame, look at this. There are a lot of swings back and forth. So it makes it really difficult. Like, like you're fighting these smaller time frame swing that changes direction so fast. And then see, it's a downswing, upswing, downswing, like down here, then up again. It's very like difficult to trade like this. So three is I wrote the whole thing on that thing. It will tell you. You see, as soon as you're gonna turn into a third swing, much better clean read. You know. So for bigger time frame, the the three bar swing is much better. I use three. I don't even mess around with two. I played enough with those before. So this is much better clean look to tells you and when the swing is up and when the swing is down. It's all scripted. I don't have to do anything. I can just change. I can change any stock if I want to. I want to see NVIDIA. Type NVIDIA. There you go. See, NVIDIA swing is up, all green, sitting right at VWAP. So I can just change it to anything. I think it's a very good um, way to look at the view to look at the stock, to view the stock based on swing directions.
Well,
Yeah.
is there any way that we can show this three bar swing on toss?
No.
No?
No. Well, you know they don't have these swing trading. Motivate doesn't have it
Yeah.
either.
Yeah, because Optima, most of us don't have
I know.
subscription.
Well, I have it.
So
I'm sure. What
yeah,
stock
you
do you want to see?
do. No,
You have
no,
it.
no, I thought that it would be nice. You
Oh yeah,
you
I
you
know.
can write the script, right? Why can't you write the script on toss?
No, it's different. No, they don't have that thing plotted. I don't know. I have to look. I don't know if they, because Optima scripting doesn't work on Thinkorswim and Thinkorswim scripting doesn't work on Optima.
Yeah, but you can always create a new script on TOS.
Correct.
Yeah, I can't do that because I don't know how to do those scripting.
Yeah, just I mean, I I'll try to, like, you guys ask me for stuff. I can pull up any. I have this list here. Where is my this? So I did this one. So I just made this one for one for individual stock. So what it means is that every time when you ask me for a stock, like, hey, can you look up this stock? I'll just put a ticker here. So if you want to give me any stock, like now let's say if I'll do APP, AppLovin. There you go. So this one that's your daily, that's your weekly, that's your monthly, and this is your yearly. So four long, like big the time frames. Okay. So now if you look at them here, that daily swing is up, weekly swing is down, monthly swing is down. Okay. So that's the story of this stock. That's how you see it. So now if you say like, well, what time frame, first of all, is suitable for your trading style? Okay. And you just have to take a trade based on that. I mean, do you consider trades based on weekly? That's a very long time frame. Okay. And and it's just like daily, yes, you just go day by day. You eventually gonna deal with 5 bars for the whole week. This is gonna be a 1 bar for the whole week, and that's gonna be 1 bar for the whole month. Okay, so like if we so time is very, very important, time frame. Like here's Palantir. Now Palantir right there, daily swing is up, weekly swing is down. You see, monthly is up. So stock is like trying the bigger time frame is good. It actually put a huge outside bar for the month. Um, Daily is up. This is down right there. So now you have to ask yourself a question like, okay, what if you have a downswing and upswing? Should you just not trade the stock, or should you trade? So that's the thing that you or I all have to make a decision. Like, what time frame is suitable for your trading style or investing style? These are they're very important. Okay, for me, you know that I'm a swing trader, and my eyes are always more focused on a 1 hour chart, which I just showed you before. S&P 500 1 hour. You see like how it went from failed F5 to 1, 2, and 3. We just went through it before. And it just 1 hour, I think, is just a very good time frame for swing trading. And considering a daily chart on top of it. So if so, but if you focus on a weekly time frame, I mean, if you get this kind of a move up like this on a one single week, which is being a higher bar, so you just like literally what, gonna sit on your hand because you're not gonna make a move because the swing is down. The swing is down, and just because now it needs another week of higher bar for this thing to turn green. It will. It's working on it. So that's what it is. So it just trading is like, see if I go to 1 hour time frame, just see same time. Like look, after eight higher bars on a 1 hour time frame, look how much it gave back. Nothing. It just literally that the 2 hours were just last 2 hours just like dead. Even three for Palantir yesterday. Like stock is like dead. Completely out of gas. So it depends, like, So if you ask me, hey, could you give me a daily? Could you give me this? Could you give me just well, first of all, I don't know what you're trying to do and what is your plan to hold a trade or whatever. This is more than enough. If you can just take a price from one swing to your prior swing high, come on, what do you want to be? It's an excellent trade. So if you, well, this is a pretty long, bigger time frame. So here's your swing high, prior swing high. That's the low, right? And well, you don't know where the low is going to be. So if you trying what you're trying to do is like, okay, you know where your swing high is, you know where your swing low is, and if you wanted to go back up, what would your first target would be? Prior swing high. You want to break this for price to make a room to the upside. You want to take out this swing high first, which it did here, backed off. Of course it will, because this is where it took a 32% drawdown. When you're going to come back up toward this high, that's your resistance. You're going to hit that resistance here. The price is going to take, it's going to back off because it recovered quite a bit, right? And then after that, it has to clear this upside zone to make a room to the upside. So what happens now? If the price managed to turn back down, where would your support is going to be? Same level. Broken resistance, act as a support to the downside. Broken support, act as a resistance. So it's opposite. You take out the previous swing high, start take a breather, making a recovery. And then from here, you just need to watch and see. The price needs to break this. If the price backs off, it means that the price managed to only put a double top. So it failed on a second attempt. So to take out the previous swing high. So when you have a double top, then it's going to try to make a third attempt at some point because it's trying to break the liquidity zone. So that's it. Price makes sense. You just gotta have to sit and watch. That's all it is. When you have a downswing, you just only look for retracements. When the price is going up, you look for the projections. There's only two ways what you use. Fibonacci extension tool. Extension is to project the price. You're projecting the price to the upside. When the price is coming down, you're looking for a retracement. That's what you use the Fibonacci retracement levels. That's all. It's not rocket science. So many of them. Like here's your AMD. It's AMD. Daily up, weekly down. Look how many weeks it's been down. Look at the 1, 2 fail, 1, 2, like all fails because it doesn't want to, the stock doesn't want to give 3 weeks of higher highs to this stock. It goes up 2 days, fails. Goes up 2 days, fails. 200 is here, stock is down here, 113. This stock might take a bit of a breather. It's been beaten up pretty bad. Up for 4 days on a daily time frame. See, 5, down day. I'm telling you, remember the number 5. Here's your monthly time frame. 1, 2, 3, 4, 5, down month. 5 days here, down. These are different time frames. Keep that thing in mind. 5 weekly down. This is what I'm working on. So everything's gonna get better and better. Not gonna get worse. I'll promise you that. So just stay focused. Keep learning. Time signals are good. I gotta take a bunch of examples and see. I've noticed like I've been going through a bunch of stocks just to kind of see like where does a price usually take a breather? What is the average bar based on the time that stock just say like, okay, it's enough. I'm tired. I gotta pull back. So if I'm happen to be in a trade that rallies 4 to 5 days, that means that that is my exit point before I see any kind of a retracement. So that's how this is how what I'm this is what I see it. It's like it's not gonna go up forever, or neither does the price gonna go down forever, right? But fifth day is definitely put day. I would say a put day to put out a put on a stock for the sixth to the downside, just to a counter trend, like a counter trend trade. Or fifth is just to exit the trade. But bigger time frame, I think it has a much better read than daily. That's what I'm trying to compare. So it's gonna take me a little time. See how monthly turns, then how often weekly turns. Because the time makes a very time different time frames are. But you see 5 here, so I can just going through so many. This NVIDIA 6 down. That's a daily time frame. 7. It's a down day. See what's a wild stock. 9, 5, 6. Whatever the number stops. But I mean, it could stop at 3. See, a lot of them got stopped at 3. But my eyes are on 5. This is what I noticed. A lot of stocks, a lot. They they make a move after 5. It's a number I'm seeing that a lot. I mean, definitely gonna extend more, but see, 5. So I just gotta go through. Like every stock is different. You cannot compare one company to another. Come on, different fundamental. Everything is different. Tesla. See, Tesla at 4. Last time was 4, 5, 6 down. Weekly only 1. The weekly swing is down anyway. So see 1. Sorry, 1, 2. Look, higher bar, down week. So it doesn't want to give 3 bars in a row for swing to turn up. That's the thing though. It's because it takes time. You need 3 higher bars. 4 down. It's actually an outside bar. 5 down. And Tesla works really good with fibs. 5 down day. Yeah, it's just 4 is the one I want to start watching for the 5th day. That's basically what it is. But 5 days, what I noticed is this makes a lot of time. Look at a monthly, okay? Five down. And Tesla has been down for 3 months in a row because of this. See, this was the inside month. So when you start going into a bigger time frame, it's going to give you a much better read. Which stock is ready to take a pause after a run, or which one is just gonna the swing is gonna might turn the direction. Look, five here, five. So September, October, November, December, January. January was an inside month. Down, down, down. Yeah, because it went up too much on the extreme. Here you go, six down. See, that's the fifth, sixth. Was Doji can on a monthly bar down. That was a huge run. 10. After 10 months, it gave back. That's crazy. 10 months or six. See, look at the sixth bar. Completely nothing after five. That's what I'm saying. It's just call it a magic happens after 5 days on a lot of these stocks. That's what this time is. There's a lot of stuff in there. These are just, I mean, the GAN has 3 bar swing, 2 bar swing, volatility swing, dollar swing. What else they have? 80, what do they have? Implied volatility swing. There are 4 type of swings. Which one you want to learn? Okay, go with that. Then you have a time boxes, the GAN boxes, then the fibs. GAN has their own fibs. Let me show you. Look how this is the regular fib that we all use, right? Let's draw this. Jeez. Then I gotta go. Tired. Get rid of all this so you can see it better. So this is Tesla, right? Let's do a regular fib. Let's say I want to draw a fib from here to here. Let's say the high is in, I want to look for a retracement, right? The first pullback will be 271. So now let's draw the GAN swing. Take this high to this low. Look at the difference here. Slightly lower. First is 278. 278, 270, 265, 254. You see, they have a different ratio they use. GAN uses. Now these ones are called do, re, mi, fa, sol, la, ti, do, which is 23.6, 38.2, 50%, 61.8, 78.6, right? So these are the typical retracement that we all see. Look how they do it. Do, re, mi, fa, sol, la, ti, do. That's different GANs. These are GAN swings, the fibs. Different. The 50% matches, but not the 61.8 and 78.6 or 38.2 and 23.6. You know me, I'm a master of fibs. That's the thing I've studied for many years. Yeah, they use different fib levels. There's not, I mean, typical one that every trader pretty much using is these retracements with Elliott and all that stuff. But these ones gives you a pretty good pullbacks as well on price. Okay, let's say we go to a 15-minute chart and take this swing low. That's the high. That's the low. So the 23.6 is at 280. The high was 281.05. And if I draw Gann, was slightly lower. So neither one of them got tested, except for this one, the very first one. And that's exactly where the price is. Took a pause. You see that what I compared them before. It's just their first one, which is that 23.6, is slightly lower, but then their 38.2 is a little bit higher than than higher than the regular one. 50 is the same because I know swings are all about the 50% retracement. 50 is the same. Then 68, then the regular one is higher. This one is lower. See, there's a lot of different ways to trade. It's not just one way, but you just have to adapt one system. But I'll figure it out. Don't worry about it. Just trade. Okay.